I just wanna chill and twist the lie, catch stunts in my 745. You drive me crazy, shorty. I need to see you and feel you next to me. I provide everything you need, and I like your smile. I don't wanna see you cry. Got some questions that I gotta ask, and I hope you can come up with the answers, babe. Girl, hey, it's easy to love me now. Hey, would you love me if I was down and out? Would you still have love for me? Girl, it's easy to love me now. Now, would you love me if I was down and out? Would you still have love for me? If I fell off tomorrow, would you still love me? If I didn't smell so good, would you still hug me? If I got locked up and sentenced to a quarter century, could I count on you to be there to support me mentally? If I went back to a hoopty from a Benz, would you poof and disappear like some of my friends? If I was hit and I was hurt, would you be by my side? If it was time to put in work, would you be down to ride? I get out and peel a brother cap, chill and drive. I'm asking questions to find out how you feel inside. If I ain't rap cause I flip burgers at Burger King, would you be ashamed to tell your friends you're feeling me? In the bed, if I use my tongue, would you like that? If I wrote you a love letter, would you write back? Now we could have a little drink, you know, a nightcap, and we could go do what you like. I know you like that. Girl, it's easy to love me now. Oh, now, would you love me if I was down and out? Would you still have love for me? Girl, it's easy to love me now. Woo. Would you love me if I was down and out? Would you still have love for me? Now would you leave me if your father found out I was thugging? Do you believe me when I tell you you the one I'm loving? Are you mad cause I'm asking you 21 questions? Are you my soulmate? Cause if so, girl, you a blessing. Do you trust me enough to tell me your dreams? I'm staring at you trying to figure how you got in them jeans. If I was down, would you say things to make me smile? I treat you how you wanna be treated, just teach me how. If I was with some other chick and someone happened to see, and when you asked me about it, I said it wasn't me, would you believe me or up and leave me? How deep is our bond if that's all it takes for you to be gone? We only humans, girl, we make mistakes to make it up, I'll do whatever it takes. I love you like a fat kid love cake. You know my style, I say anything to make you smile. Girl, hey, it's easy to love me now. Oh no, would you love me if I was down and out? Would you still have love for me? Girl, it's easy to love me now. Oh, would you love me if I was down and out? Would you still have love for me, girl? Could you love me in a Bentley? Could you love me on a bus? I'll ask 21 questions, and they all about us. Could you love me in a Bentley? Could you love me on a bus? I'll ask 21 questions, and they all about us.
Hello, darkness, my old friend.
All right. Sorry about the delay. Getting set up here. Okie dokies. How's everyone doing today? Yeah, I don't want that running in the background. A couple more things here. Okie dokie. All right. Hello, hello. Hello, hello. We can get started in just a moment. I'm just setting up a few extra things. Yes, I did just get an alert on that MicroStrategy. I don't know if I'll be too late. As soon as I get live, it comes in. So yeah, I was looking for MicroStrategy to come back down into this area right in here. So it just triggered my first alert. I still think we can just go lower here. So I'd still kind of want to see this lower, especially on the day. We're underneath the 2 standard deviation move for MicroStrategy. I don't mind scaling a small piece for playing the potential for a little bit of a bounce down here. But didn't yet. All right. Okay. Let's take a look at just kind of the markets, and then we're going to look at some of the, we'll do some follow-up on yesterday's video. We're getting some decent price action right now, so I might, let me give this a second here. Maybe I'll just create an alert, maybe halfway down here. Give me a second. I like to fade weakness. Very, very much so. Strong, strong moves. All right, let's see if that'll hit. I don't know if it'll come down there or not. For those that don't know, so MicroStrategy is one that I traded the other prior trading session, and it played out really nicely, and then I pretty much dumped the entirety of the position. And now I'm looking to see if it comes back in here for potential another fade. This down here is the lower monthly implied move next to the lower weekly. So right in this area as we're kind of coming into it, this pink line is the 2 standard deviation move for the day. So big selling. These are the type of moves that, I wait for underneath 2 standard deviation moves or into like some key areas like this. Instead of trying to buy the dip, intraday without any sort of plan, I like to wait for it to get outside of what the market expected. And then you can play shorter term scalps and or, shorter term swing trades as long as you just don't oversize your positions. That's a good question. How do you cope with that? The market trigger your stop loss only go up 5 minutes after? You got to think longer term. So it's going to happen over the course of time. There's going to be times where that doesn't happen. There's going to be times that when it does. So you just got to extend the thinking out past just that one specific trade. That's just part of it's going to happen regardless. So, but if you focus too much on trying to make it never happen, you can probably run into a lot of problems there. So one way to adjust for that, to make it happen less, is widen stops, smaller positions. That'll decrease the amount that takes place. Okay, so we have NVIDIA that's basically flat on the trading session today. It's up a couple percent. It was up a lot higher, but it came down quite a bit. So we'll take a look over here. Came into its upper eyeball range. We do have earnings, and earnings is going to bring quite a bit of volatility, about almost $14 of expected move for NVIDIA. This could be plus or minus, right? I'd imagine NVIDIA earnings are going to be great, right? Of course, they're going to be great, but I don't know what guidance is going to look like and how the market's going to obviously respond and react to all of this. Apple up slightly on the trading session. Microsoft down 1.46. This one is definitely one to watch here. So I'm going to go ahead and show you why that is. More importantly, I actually Meta. I'll show you Microsoft, but I think Meta and Amazon are the more important ones here to watch. So Microsoft just being outside of its weekly implied move. Sometimes you get plays back into the weekly. We saw that just the other prior trading session. But if you look at the daily time frame of Microsoft, right, it just kind of recently broke down, whereas we have, after our strong move, we consolidated and then pushed further. But Meta, this is one, whoa, geez, either that was a glitch or something, but I was like, whoa, where's this at? This one is pulling into that trend line that we talked about on last night's market brief from the 2022 low and the 2025 low here after those pretty significant moves down in the market. And we're almost there. We just right now are trading right at around last year's closing price, which is, these are important levels, right? You can see that we actually had it as support over here. We had it as resistance over here, and now we're coming back into that level. And you can see we're kind of trading in and around there. The intraday trend for Meta was right here. I was watching these lower highs as we came into that dash line. That dash line is last year's closing price. And we're kind of coming right back into that area now as we broke this little intraday trend. So this is a shorter term little thing. But if we go into Meta on the weekly time frame, you can see right now we are right back to that lower weekly implied move. And Meta has broken now 2 or 3 weeks in a row of these expected moves. And, you know, that's very substantial. It's pretty rare to do that. So if you break, 3 weekly expected moves in a row, I'd have to go back and see if it was 3 or 4 or what it was, but I'm pretty sure it was 3 expected moves. There's a more likelihood to see it. We're more closer to a bounce than we are to just complete chaos, right? That would be as far as probabilities go. It doesn't mean that we can't go lower, but we're probably nearing that point of a bounce. So when we start to look at like last year's closing price and confluence with this trend line, we're probably in and around the area where we begin to see like short covering rally and or people try to buy the dip and send it back up, for a little bit of a bounce. And be careful with the bounces, right? The bounces, right? People say, yes, I caught the bottom, or yes, it's bouncy. But many times it's just consolidations to lower lows. Like we saw in MicroStrategy, right? MicroStrategy, yesterday, right? You said what? We said, yeah, you sell into this stuff, right? You take advantage of these pops, but just be aware of the trend is just miserable, right? So and then it cracks down lower, and then we start to key in on some other key levels like this, like this lower monthly implied move, or potentially even a little bit lower, this lower weekly. Now Amazon, same thing. Now I don't think that this one had 3 weekly breaks, but if not 3, it's 2. So right at around there, and this one's coming into its trend line to this year's low trend line over here, and that's also in confluence with the year-to-date closing price, last year's closing price. So same thing here, right? So we traded this intraday today in the Discord, right? If you traded that, as far as an intraday trade, the entry was more right in kind of this zone, and then it popped up very quickly. And if you're trading it intraday, yeah, these are things where you would scalp out, right? You take some profits. It was a really good risk to reward. I'm not really looking at this as an intraday trade on Amazon. I'm looking at it for the potential to start building into a position. So I started kind of a little bit here. Maybe if it goes a little bit lower, I'll try to do that. But then I'm going to sell off into strength, right? I'm going to sell the strength. So if we can get a bounce, awesome. If we can't, then I end up just getting out. But it's a small position in a big company. Now, if you want to know where this could bounce to, you can always look at something like maybe like a fib retracement, right? So maybe a 50% retracement, maybe all the way up to here. Now, it could be a sloppy move. It could go like this. It could do something like that, which in turn I'd get stopped out. But, you know, that would be ideal to come back up into this area. That'd be a nice bounce in Amazon. What's up, Exotic? Okay, Rig, yeah, we can take a look at some of these names. Let's get a glimpse at the SPY S&P 500. Today we came into the upper daily implied move, or right in a. We technically did on SPX, right? So if you watch the SPX, which is the larger product, right? SPX came into its upper daily implied move and the 0 DTE level, 6680, and we found some resistance there. We are still in negative gamma, which is roughly at 6,700. I don't know, 6,700 to 6,730, kind of a zone in here. So we're still in negative gamma and or gamma neutral, however you want to look at it. Dealers can sell into selling if we break lower, buy into, and if we start to break higher, volatility can get suppressed, obviously. Floating in and around the lower weekly implied move. It's very common when you get to weekly implied moves, you know, you doodle around here. Now, NVIDIA earnings is obviously going to shake things up. That's for sure, for certain. Give me 1 second here. Stop. Okay. What just happened here in markets? Let me just get a little bit of a pop. All right, so Coco, come here. Stop. Market net flow has been bullish divergence all day, but yet if you're paying attention really closely, the green line has been kind of trending lower, which has been not a great sign, which has kind of brought the market up, right? Brought the market down, and then the red line's been kind of contracting up. And really recently here, the green line's been going up and the red line's been diverging down. Give me a second. Coco. So we do have convergence. That's a positive sign as we're kind of heading closer into the earnings, but yet the price action is still relatively weak underneath that week-to-day VWAP, and still we are underneath a declining 5-day moving average, and underneath also the November volume weighted average price, which is coming right to here. So still a lot of weakness in the market, but we're nearing levels and we're getting signal charts that are pretty darn frothy, which can very well lead to the a bounce. Yeah, Coco's warning us about NVIDIA earnings. As far as some of the daily expected moves today, getting just obliterated, we can look at some of the 2 standard deviation moves taking place. Give me a moment. One that kind of got on my radar was TIGR. This is a China equity. This thing got smoked. I was just watching this trend to see if it does anything, but we're underneath the 2 standard deviation move there. Not my ideal type of setup, but down 11% today. This is a very volatile, speculative China equity. We had EXAS today, hit a 2 standard deviation move to the upside. This thing exploded. 73.28 was down here, and then we still continue to explode off. It looks like it might be halted, actually. Probably on some news or something like that. Then we had CEG. This one hit the 2 standard upper expected move as well. This is a utility play. Utilities have been looking pretty good, actually. If I pull up XLU, all right, utilities have been just consolidating over here. So if we can maybe break through 90, maybe that opens the door to try to retest those highs. As far as some lower expected moves, we had ADM, Archer Daniels. This one got clobbered today, and that's sitting at lows right now. This looks kind of like news driven. I didn't see if there's any news behind it. 58.73 was the 2 standard deviation move. So, you know, up in and around this range. This thing's now working on what, a 3 standard deviation move. That one got pretty smoked. Some of the crypto related equities been the same thing. Circle, SRCL, This one is at 68.40. This one was a 2 standard deviation break. And when we get these 2 standard deviation breaks, I like to look for potential fade opportunities. This one is not really a strong move down. I'd like to see, trend breaks, right? So if it's doing like this, we'd want to see potential trend break, but that's right by the 2 standard deviation move there. MicroStrategy, I believe, hit a 2 standard deviation move today. If not MicroStrategy, some of its ETFs did. Those 2x ETFs. Coin made some big price movements today too. Coin got into 1 daily standard deviation move area. Yeah, so we started off looking at MicroStrategy. Let's just go back and see, what the price is doing. So price, bounced from this lower monthly implied move, and then it's kind of just sitting back in. I would prefer it just to kind of come screaming down. I don't like when it bounces like this and then comes down slowly. That's just not I just don't like that. It's not my favorite. Like, for example, here, right, we came in pretty strong, we bounced, but then it came in. Like, I'm not going to buy the 2 standard deviation move down here, right? Because then we started acting like that. So I prefer much stronger moves. Yeah, MicroStrategy did hit a 2 standard deviation move today. CBOE did. CBOE hit a nice 252.31. That was its 2 standard deviation move right here. We saw a nice bounce back. CME did too as well. CME, nice 2 standard deviation move. We came underneath it, traded a little bit lower, and then we've recovered quite a bit. I marked up this screen because I traded a little bit over here. I'll remove these now. So nice move there in CME off its 2 standard deviation move. Yeah, we can look at some of these names. I'll go through the chat and we'll go through them. Market's kind of just stalling out right now. What's up, Frag? $6,600. So down here is kind of more of a focal point for the S&P 500 as of right now. It's very common to get sucked back into the lower weekly implied move. I honestly wouldn't be too shocked if we actually end up there going into earnings. I want to look at some of these bigger names right now, see how they're setting up. NVDA just going sideways. Apple chopping around. Microsoft chopping around. Google shot up today. Nothing's setting up yet. Amazon did go green on the trading session after a pretty significant sell-off in the morning. But since then, what are we doing? We're just putting in lower high. So far, we have a higher low, but I mean, all this doesn't look all too hot right now. So let me see. Meta still kind of holding that trend break, but just not a strong move. Tesla flat on the trading session after running up to in and around its upper daily eyeball range. Let's see here. I'm interested to see what the S&P 500 is pricing in. Gee, there's so much risk pumped into the system right now. I mean, look at just going into tomorrow. I mean, we still have a lot of trading time left here, but $94 of expectations of a move in the SPX tomorrow. That's a single day. This is sometimes bigger than like weekly expected moves. The doors of volatility have swung wide open in these markets. We did tag the upper S&P 500 daily expected move. You are correct. So SPY we got pretty close to. It was basically there, basically a tag. But the SPX 100% did tag its upper daily expected move, and that was also in confluence with that 6680 from this morning, the 0 date level that had some attention at it. And then we had 6,600 have some attention, and then even down here had a little bit of attention as well. And we're kind of just chopped in that range so far. And then, yeah, we're right. So right here is that kind of monthly implied move for the S&P 500. We're just floating in and around there. It was a VIX expiration, so we got a little bit of probably had what had to do with that morning pump. That morning pump right here probably had to do with VIX expiration, and we came into the upper eyeball range right there and just reversed right back down to chop around. Qs, if we look at the monthly time frame, look at the monthly expected moves, we're just basically trading in and around the lower implied move right here for the month. Yeah, we got FOMC soon. FOMC minutes in like 9 minutes. Do we have anything else on deck? Tomorrow we get some non-farm payrolls, unemployment. So maybe that's what the market's sniffing out and why it's getting so volatile here. So unemployment rate, non-farm payrolls. I'm sorry, was that today? Or no, that's tomorrow. I'm getting my days confused. FOMC minutes is right here. There we go. So we got that in a little bit. Wait a second here. I'm confused. Is my time messed up? Who knows when FOMC minutes is? Is this in nine minutes, or is my time zones all incorrect right now? Did I mess up? Did I not adjust this when we had daylight savings? I'm getting confused. I think I just didn't adjust this with daylight savings. What am I, -8? I think that's correct. There, yeah, so in 8 minutes, right? It should be 8 minutes. I think I just didn't do my, okay, thank you, Frag. Yeah, okay, thank you. I think I just didn't adjust my time zone when we had to change. Thank you. Thanks, Exotic. Yeah, thanks, everybody. Yeah, we got NVIDIA earnings, so that's definitely going to add the volatility that we're seeing. And then we mix that in with non-farm payrolls. Man, that's big. It's going to be a big day tomorrow. It's going to be a big day. Watch us just finish flat. Hey, I'd be totally fine with that. We finished flat. I'm still like, so for me, I still think it's possible that we go to 7,000 for the year to try to run up there. I think that's still possible. So, but I'm not going to go all out thinking that we're going to get up there, right? So I'm not going to make these maxed out positions 100% of my portfolio that we're going to 7,000. But I want to be a part of it if it was to go there. And if we don't go there, if we go lower, I'm okay with just having half the amount of exposure, even less, because then if we go lower, my portfolio doesn't get hurt that much and it just kind of drags down with the market a little bit. And if we do rip up, I do get a nice, good piece of it in whatever I trade along the way. You said non-farms are canceled? Of course they are. Right. The government's open, so are we? I got to look into that. If people are starting to say that they might be canceled, I don't know. I would imagine that we can get this data, but we'll see. I'm in PST. Yeah, I'm PST time frame. Thanks, Joe. I'm getting a little bit of a move here. What's moving us? Yeah, Amazon kind of making a little bit of a pushback here. Nothing crazy. Excuse me. And then Meta, I mean, this is still down 2%, but still holding kind of the last year's closing price right in there. September non-farm payrolls is coming, October canceled. So we're just not going to get October numbers. I did hear somebody say something like that. It's off into the ether. We'll never know. That sounds fair. You think that they're delayed? I mean, we should get. I mean, we should get some data tomorrow. I don't know. I'll look into it and I'll see. But I feel like they would update their calendar. You know, if that was the case. I don't know. We'll see. Let me get to. I'm gonna put on my global news just so we can see if anything. Aides to reportedly see no rush to levy prompt semiconductor tariffs. So we get a little tariff talk over here, huh? BLS confirmed no October jobs report. Okay, so we'll get September. Is that? So if BLS confirmed it, that's the source that you want to listen to. All right. Checking on our dear friend, Mr. Sailor. Coming back up to its 2 standard deviation move right now. I didn't get what I wanted. Whatever. And this is the case. So if some people maybe more aggressively, they're like, okay, I'm going to take this, and they're doing fine for an intraday trade. I didn't get it, and we've now bounced twice from this level. So if we break it, I don't want to trade this anymore. So if you're in it, awesome. And if you wanted to swing trade it, don't even worry about the minute time frame. Go over here, you look at it, you're like, okay, it came into my level, I'll buy a little bit. If it goes a little bit lower, you can try to position yourself or get out, whatever you want to do. And then if it bounces, like for me yesterday, it was great. Nice bounce, nice bounce, and then I sold into it as it was reaching above its daily implied move, which you can see a little bit more clearly if we go back to yesterday. Right in here. So I sold like 80 or 90% of the dang thing. Which was explained on last night's briefing before. It's a nice little pop, I guess. October jobs report has been rescheduled for December. Oh my, there's all kinds of news coming on, huh? But we are getting data tomorrow. Mechanic Matt, dude, that's funny. Hey, Mechanic, what was that? What was those charts that you posted the other day that I responded to? I was like, oh, that looks really good. What was the name of that again? I want to pull that up. That was a great chart. It looked really clean. Now we're coming back into the week-to-date volume weighted average price, not too far off of it. What's up, Ryu? Ryu? What's up? Denies cumulative tick charts still work. I mean, they work, obviously. I don't know, but all indicators work, right? They all work because indicators are just a mathematical equation. The math is always going to be correct unless if somebody does, I don't know, like the math is right. The math is correct. It's a mathematical calculation. So I want people to, burn that into their brain, because a lot of times people will say, oh, that indicator doesn't work. No, the indicator works. The strategy behind it or whatever you used it for is what failed, right? In strategies, there's always a loss rate. There's always going to be a win rate, loss rate, whatever. So always think through that in terms of probabilities and kind of understanding that, whatever the indicator is, it does work. Mathematically speaking, it is providing you data based off of typically price and volume, sometimes volatility. MicroStrategy is a mess, much lower. Yeah, MicroStrategy probably will go lower. That's for sure. No shock there. But what we also know is it's not going to go in a straight line all the time. It's going to have some significant bounces. So if you want to do fade bounces, you look for like massive levels that are outside of what the market expected, and then you can potentially catch little bounces. Or you can wait for a big bounce and short it. I'm not much of a short seller. So yeah. CHTR. All right. Let's drop some tickers into the chat. We'll take a look at some of the individual names. Oh, wow. Yeah, this thing is slow bleed, man. This is just like slow bleed down. Charter Communications. So what I mean by weakness can get, weak stocks can get weaker. Look at this break on earnings. It basically doesn't even bounce. It just goes sideways for the most part. And then it just dies. What about Comcast, CMCSA? I was watching this one for a minute and it didn't go anywhere. You know what looked kind of interesting was DKNG. Not for purposes that might people think, but I was just watching it in recent trade. Yeah, it's kind of doing it. Like, so you had earnings over here, right? After a big move down, the market gapped it down, closed at the highs, and now price is kind of just consolidating. Still very weak, but hey, maybe you come back up to try to test this, right, with a smaller risk or potentially even higher. It's still a bad trend, but yeah, you never know. It's good to see, sometimes big price reversals on earnings can mark turning points in the market or whatever asset that you're looking at. But DKNG got clobbered. Look at this. 50%. I mean, a lot of stocks did that much, but then we had earnings out of the way and it like kind of reversed itself. I mean, but overall, this chart looks just horrendous too. So I think it really started breaking down when Hood announced that they're going to do like sports bets or whatever. Somewhere around that time. Yeah, we got the FOMC minutes. I mean, I doubt that like anything really impactful is coming from them, but they all supported reducing the target range for the federal funds rate. Almost. All right. Yo, give me a moment, okay? Be right back. Did you cover Amazon yet? Are you swing trading? Yeah, I'll cover Amazon right when I get back. Let me be right back. Yeah, we can check on gold. We can check on gold futures. We'll look at a lot of this stuff. We got plenty of time. I'm going to be here for a while. All right. I'm going to just bring this in, and then I'll be right back. Be right back. Yeah. Right. Oops. Okay. Put this back up. Is my vocal going? Come on. Okay, what's the market doing? What do we got going on? We're just up slightly, just doodling it around. This little level right here is the lower IVOL monthly range. We bounced off this one, then we went for the EM over here. And now we're just kind of doodling in and around. Still pretty darn weak. Market be pretty darn weak. Let's look up some of these individual names here. I'll go from there. Just trying to keep an eye on some of this stuff. Other screens. Okay. Take a look at some of the intermarket stuff actually really quick. Take a look at the dollar. Dollar making a move today. Nice break higher on the dollar after a little bit of a consolidation. What's oil doing? Down. Pretty decent sized move in oil. This thing keeps looking like it's about to break out and then just gets reverted down. This thing is just choppy. Still consolidating here. If oil breaks lower, I still think that this is a good sign to be into something like bonds, including like TLT. It doesn't have to be TLT. You can use other proxies, but still seeing this consolidate nicely here. But building positions in bonds, it just seems like a decent setup here. It was over here. Now it's doing it again. Did it over here, right? And we're still seeing these higher lows kind of form and higher highs. So, yeah, maybe seeing this thing 3% plus higher in the near future makes sense to me. Gold. Look at gold futures. Yeah, I mean, this thing was just an explosion to the upside. It's bullish context. Things are bullish here. It's actually holding up pretty well given the fact that the dollar's up. What's the yields doing? 10-year yield is down slightly. This thing also looks like oil, right? Consolidating. Wouldn't that be something to see yields fire off? Ugh. No. XLK is one of the higher performing sectors so far. It reversed off the highs significantly, but this to me makes sense. If you watched last night's brief, we talked about the bullish percent chart, how it was getting pretty frothy to the downside. I have an iMac or Mac Mini I have an Apple computer. It's like the computer, the little one. It's the little or bigger one of the little ones. It's pretty beefy. I would like to have a PC, to be quite honest, at this point, because a lot of the software that I use works pretty much better on PC than it does here. Yeah. Meta's just looking like it's trying to hold together. Doesn't look the greatest. Get back above daily VWAP would look a lot better. Amazon down 57 basis points. This one's pulling back into VWAP, kind of just consolidating here. Underneath VWAP, it opens the door right back down lower. fine line here with a lot of names. This SPY is just kind of going sideways. PC for life. Okay. That looks interesting. Yeah, let's take a look at some of these names. Sorry, I'm watching a bunch of things on my screen here because I'm interested in trading today, but gotta just be patient here. Sure, we can look at GME. Yeah, it's good to be skeptical on Meta. Meta's been a hound to the downside. So if you are playing for a bounce in Meta, you should definitely. I mean, it makes sense down in these ranges right here, right? It makes sense given the trend line and we're year-to-date close, and it was already a strong move. But yeah, you don't want to just kind of go in super heavy out of the gate, and then all of a sudden it just goes down, and you're like, I'm out of it, and then it just rips right back up, back to your entry. Hello from Germany. Nice. Hey. Yeah, Meta and Oracle have been getting hit. I've been watching Dell. So Oracle, yeah, Oracle looks pretty rough. Not a huge fan of that one. But Dell, I have some alerts set here on Dell at like 116-ish. I was hoping to maybe see this kind of drive down into these lower areas. This is a pretty straight shot down in my opinion. And if we do come down here, we got last year's closing price. We had prior resistance turn support. Unfortunately, earnings is around the corner, which I don't want to like have a swing trade into earnings on this, but if it were to come in here after earnings or before earnings, maybe it makes for a good intraday trade or a shorter term trade. Oh yeah, Neo. Thanks, Matt. What are you watching on a lag or something right now, Matt? You just responded to that like a minute ago. Yeah, this is a great looking chart. Good find. Neogenomics. So I don't know anything about it, but earnings is out of the way. You have a nice consolidation over here, right? Good volume over here, and then you have volume drying up. You got a good eye for that. That's a good one. So if it breaks out of this range, bam, right? Maybe it sends us up back up to this prior high, 12, 13, and then you have a good idea for a stop in and around these ranges, however you want to kind of base the risk off of. But yeah, pretty solid. Pretty darn solid. You're a DKNG at 29. DKNG. So basically kind of today, right? You entered in today. Yeah, I mean, volume's really drying up here. Look at this. I mean, we're probably going to get a move, whether that's to the downside or upside, I don't know. But you have price action contracting, and then you have volume drying up quite a bit here too. So oh, okay, gotcha. Thoughts on Soxel? A little bit all over the place for me, right? So this, if it looks like this on a daily time frame, I'd probably do more of an intraday kind of look and see if it sets up on an intraday for a shorter term trade or maybe even a 15-minute chart. I liked it over here when it was consolidating. Yeah, so somebody had mentioned GameStop. All these, a lot of these charts all have slow, just consistent, just hemorrhaging. Just. A lot of the small caps haven't been looking all too hot too. So yeah, it's getting very tight. It is. So, maybe we do see breakups higher in the shorter term, but I'd be very, very careful on any bounce getting, potentially faded back down. SMCI, somebody had mentioned here. Let's see. Yeah, this one kind of broke under this channel. Geez, yeah, these things are just getting hammered. This one kind of went sideways for a few trading sessions, and now it's breaking lower. So, I mean, yeah, if like the next trading session was down 2 standard deviation moves, maybe I would look to scalp it intraday. But man, if you try to buy this low or try to buy this low, right? It just keeps on dropping. So you got to just be, once again, right? If you're buying weakness, and the only way to really do that is you got to have very, very small positions, because the chances of you being not a perfect entry are highly likely. All right? There's a very high probability that you're not going to catch it perfectly. And you don't want that to damage a portfolio by trying to fight a trend. It has its place, especially in conditions like this, it does. But even so, you just can't go too hard. You go too hard, you mess up fast. IQV. Yeah, IQV was one that I did trade. Looks still really good. IQV was over here. I traded into it, and then we consolidated back test, and now it's pulling back again. Pretty good. No complaints there. Some of the financial names got smoked. Let's see how those responded right in that area. Oh, they're just going sideways. No bounce in financials. Kind of just sideways price action so far, and it's not a great looking topping pattern. Remember, Ethereum kind of looked like that. I mean, not to that extent, but well, kind of actually, right? It kind of had that topping formation, and then this one broke lower. Not to say that, there's a correlation there or whatever, because I haven't looked at it, but look at some of the crypto names today. Ethereum getting hammered again. Let's look at Bitcoin. We'll look at Bitcoin futures. Down. Saw a nice recovery yesterday, but now we're getting some follow through here to the downside. I think a lot of people are really kind of getting quite bared up here, seeing all these names. I mean, rightfully so. A lot of these names have been just absolutely obliterated. But that's the point of what I do, and when we do these market briefs, is to get prepared for the potentially next move. So we've been talking for a while now about the market getting too frothy, right? And everyone's like, no, it's bullish, it's going everywhere. Yeah, obviously you get prepared for that stuff, but that's something that we've been talking about for a while. I mean, I think we actually kind of started talking about it in and around here. And what have we done since then? We went a little bit higher on news. We had a big break. We went up, and then we break back down. We haven't done anything. Up slightly. So now, right, with seeing a lot of these names that have just been obliterated, now I'm starting to prepare for the flip, right? People are now getting super bared up because we've been seeing price action to the downside. I mean, come on, we're 4% off of a high. Oh no, right? Bring me down 10%. Give us actually a correction. Sure. But we're seeing other names way off that. Like Amazon is basically flat on the year after a straight shot down, right? Meta, flat on the year, if not down on the year. And this is after a big earnings gap down. Doesn't look good, right? Tesla, what is this, down on the year too? Basically flat on the year. All these big mega cap names are flat or down on the year. Google's up substantially. Microsoft probably up. I don't know about substantially, but yeah, it's a good, it's up. What is this up? It's roughly around, 15%. NVDA. Up 37%. It's holding the market together. And it's reporting earnings with about $13 of expected risk. That actually seems kind of small for NVIDIA. So 7 to 8% expected move. All right, we see some tickers coming in. I'll pull up some of these. MSI, LEU. LEU I traded. That was a monster trade. LEU was over 100% gain. I'm just trading the equity. I traded it down here. Look at how tight the risk was. And it just kept going. And then it actually consolidated here again, and we just flew. Yeah, LEU, this is a pretty substantial pullback. But I would say, this could be consolidating here, getting ready for another move. It's a possibility. I liked it over here a little bit more, but if this is a breakout today, you know where a stop would be. Rivian. So Rivian was on my tight list over here on these like this over right here. And it just broke out, saw a nice, and now it's pulling back. I will note on Rivian, this is actually a pretty strong shoot up over here with some really good volume, not only earnings, but over here too. And then on this drawdown over here, we're still seeing declining volume. So the selling is just on lighter volume, and it's retracing quite a bit of this move. Could spell out some opportunity. Let's look at the weekly time frame. Pretty nasty reversal on this week. And we're pulling into what, a rising 10 week, 30 week, and then the 40 week over here. So it's actually above all those averages. Maybe if we get a few more days of consolidation, maybe it sets up. Then you kind of try to break a high from a prior trading session and go from there. MSI. Ugh. This one looks like some heavy selling here. Eek. Look at on this strong move down, it didn't even bounce, and it went basically straight down. Not much of a fan of this. Sure, you'll get a bounce at some point, but this, like, look at how it just kind of went sideways and then just crept lower. This just feels like bigger players just dumping. Yikes. There was a pretty extended tick reading right there. For those that track the tick charts. We just got under a 950. There, this is a big break in the market, so maybe some news. This is the lowest tick reading of the trading session. And we have SPY kind of breaking in lower here. Perhaps we go back to our, perhaps we go back to our daily or weekly implied move. All right. Yeah, there's NQ. Just getting some pretty substantial hits here as it broke down. Whoa. Big. Careful here. Massive tick reading to the downside. Look at this thing. This went almost 1,300 down. That's a monster. NVIDIA barely budged on that. Apple, so Apple kind of draw down into the daily VWAP on that. Microsoft, not much of a move there in Microsoft. Amazon, did break the daily VWAP, which we talked about a little bit earlier. So not the greatest look there. And then Meta probably broke on that. Yeah. This little break over here. So if we start heading lower, I'd say just right, I mean, this looks like it suck us right back into the lower weekly implied move. Zoop. Take a look at Snowflake, yeah. Snowflake's holding up well. Snowflake's strong. I mean, look at these last, few trading sessions. This is, doing its thing, consolidating quite nicely. Holding strong. High yield. Up on the trading session. It's holding itself together, which is a good sign. It's at the lows of the trading session right now, though. Do I see near bottom for Target? Didn't Target report earnings or no? Or is it about to report earnings? It just reported earnings. I don't know about a near bottom for Target. It looks like it's about to crack this bottom, this low. And it was after earnings, so... I mean, maybe we're getting close to it, but right now it's just pretty weak chart. And I want to, reiterate, if you look at something like Clorox, like don't think that it can't go lower, right? So it kind of looked like this. And then we cracked and we just keep heading lower. See that big break on Clorox? Yeah, coin did a big break. We just hit a 2 standard deviation lower expected move on VRTX. $420.08. So this one just went into 2 standard deviation move today. Yeah. Market net flow. Still not really doing much, actually. It's actually, this green line's been increasing. This has been going flat. So I don't know what drove that exactly. Because I don't know if my news feed's not working or not, but I didn't get, nobody said anything. And the last one was about the FOMC minutes, so. SPY's now flat on the trading session. Look back at MicroStrategy, see if we had hit our lower weekly implied move. No, MicroStrategy didn't even budge. Very quiet. Rocket Lab. Yeah, man, just a lot of these names, right? Just basically straight down. I want to see if, no, I didn't get a notification that Dell hit my area. Of course. Of course it didn't. Why would it? Let me go back to Microsoft. This one was looking kind of interesting. I want to see if it just keeps breaking a little bit lower. This is a pretty big break here too. After just a little flag. Is the Fed talking? I feel like I would have heard something in the news if the Fed was talking. Um, 3,100 Patreon members. They're not. There's some free members within that, Bambino. So like they don't have access to the Discord. Like sometimes people sign up just for the free portion of it, and every once in a while I'll make a free post, but they're not in the Discord itself. So those numbers look a little bit skewed. But is the 2 standard deviation move on SPY the 1 month? 2 standard deviation move on the daily or the weekly? NVIDIA will save us. Meta for a swing. I think it's kind of near. I'd like Meta, but I'd like it. I mean, might as well go for the trend. We're not too far off of it. Down here at like 572. Right? If we're gonna bounce Meta, right? We're now negative on the year for Meta, but we're not too far off this trend line. So we're kind of in that area. So if you go long Meta, you go small, and if it goes a little bit lower, you can try to build into it, and then you pretty much have to sell the bounce. Do I have any volume scanners on the Discord? I mean, no, not necessarily like an individual scanner, but I mean, TradyTix, I have TradyTix query in there, and you might be able to look various things there. But then I have the Asher alerts, and when things are hitting, lower daily implied moves and lower 2 standard deviation moves, there's pretty much volume behind that move. Monthly implied move, 2 standard deviation monthly implied move for S&P 500. That would be pretty huge. I'll look to see what the number was. For SPY, it's 629.82 on the downside. That's quite down there. Meta for a bullish swing, question mark. For maybe a bounce, a near-term bounce. So yeah, it would be more on the bullish side. I mean, I wouldn't short down in these levels. I'm not interested in shorting after it's already came down this way. But I also know that if you're trying to go long Meta here, you got to understand that it could just keep on selling it, like going down, and then potentially you might get a big volume down day, which is like the more capitulatory move. So doing that kind of stuff, you have to be really focused in on your sizing. Zoomed in. Did just talk about Rivian. I think I showed PayPal a little bit earlier. It doesn't look too good. Not really a fan of this chart. It's like hanging on, and then it just broke. And this has been weak all year, so I don't know. I feel like there's other opportunities in other names, other places. Like, I'm not going to hold this for a long time if I do. It's been just a steady, slow bleed here. Starting to see some bullish divergences form. So yeah, we might be nearing that point of seeing a little bit of a bounce. But once again, it's like you can't go too heavy on these names, because if you do and you're wrong, you got to be quick to get out. Somebody had mentioned SoFi earlier. Just got to let it consolidate. Yeah, it's just sloppy price action. It's actually, I like price action contracting. This is kind of like expanding. ESTC. Yeah, it's building a little bit of a base, isn't it? Hasn't gone anywhere all year, and there's some pretty large gaps. But you are seeing the higher lows build, so that's positive. Price action getting a little tight, so yeah, maybe that opens the door to set up for a base breakout to retest highs. Tom Lee's Bitcoin target is 250,000 by the year end. Yeah, that makes sense. Yeah, Dominion or D, right? Dominion Energy. Yeah, this looks great. Looks like I already have it on my watch or charted. So watching for maybe a 62 breakout, but it's holding. It's kind of getting rejected from this area now. But if we can start to see strength or build up a little bit of a consolidation, that could be nice. Am I still bullish oil? I haven't been bullish oil. It's been in a bearish trend. It's kind of a bullish consolidation here. So if it breaks out, that might open up an opportunity for oil. But right now, it's just been putting in lower highs and getting rather tight. Is this live trading? Yeah, I haven't really initiated anything yet, but we're just kind of watching the markets. And then we have NVDA reporting on earnings today too. Netflix down 4%. After being up a 2 standard deviation move the other day, now it's down. Choppy, moppy. Thanks, AK. The market is giving short me, short me. I mean, there's a lot of setups for short, that's for sure. Even up in these ranges, I can see why, people would short. I'm not, like I said, I'm not much of a short seller. I'd rather just wait it out and or look for, long setups. It's just a preference. Yeah, Matt, I miss moves all the time. It happens. ASTS, let's see what that looks like. Yeah, I was kind of watching it tighten up over here. It's still kind of holding that trend there. Broke this one. Man, just imagine if you get all, in the hype and then you hold it down for 44% drawdown. Like this just goes to show you there's so many names that are down 50+%, 40, 50+%. You got to be so super diligent with just not getting sucked into the hype and waiting for these consolidations. I can always, yeah, I could long that. BMNR. Not my type of setup. Yeah, not my type of name. Seeing these, it seems like one of those stocks that are kind of in play sort of things that if it makes sense intraday, maybe you can trade it shorter term. Bitmine immersion. It's like bull, right? It's not like my type of setups right here. Earnings coming into play. It's just I don't really like to put size behind on these type of names. Prefer kind of larger market caps. Donut, isn't Donut like a higher short name? Yeah, this just got cracked lower. Yeah, it's same here. Not my cup of tea. But you are, if you want to see it, you are building higher lows, and now we're pulling back on a potential shorter term trend change, right? Then you get these random pop up higher, and then they get faded. It's a little bit it's just too noisy for me. I believe this one has a pretty high short interest, if I'm not mistaken. We can take a look at Grab. I did trade this one a couple of times. So we came back to this larger breakout area over here, and we're below it. So maybe if we start turning back up through 550, maybe break this trend, that might be a little bit better, cleaner setup. But right here, it's kind of a dangerous territory. Kind of opens the door to try to come back to 5. I will still state that, man, there's been some big volume on this move here. So it just feels like maybe perhaps institutional type entries on this breakout over here with that type of volume back to back to back to back. ONDS, that's another kind of hype name, right? Had good setups, that's for sure. And then, you know, at more towards these ends of runs, you start to see really volatility start expanding. The ranges of these candles get a lot bigger. And then it typically means that you're going through a period of distribution or consolidation. And, you know, just a quick hit down here is down 55%. So I don't want people thinking like, oh, okay, it's down 55%. If I buy, you know, X amount of shares at 7.5 and if I, you know, doubles, right? Sure, it's possible, but you're also buying in where all this volume's kind of coming in. You get a lot more volatility. You get a lot more cleaner setups earlier on. And now you're getting just these massive kind of swings back and forth. Like, look at these swings. These are huge. We're talking like from $6 to $8 on a daily basis. It's crazy. Rig and Lunar. Let's see, Rig. I mean, this is quietly picking up here. Yeah. Kind of another one of those lower price names within the oil space, right? Nice consolidation after this little, you know, pop higher. And then we had earnings, and now it's just kind of consolidating here too. So, I mean, it doesn't look horrible. I'd say that it's kind of just running into its prior high over here from year to date. So we're running into that a little bit, but we're kind of consolidating. If we can break through that, that's new highs on the year, which we just did. It's a new high on a year right here. It's not necessarily a bearish thing. Then Lennar, there's a lot of housing makers, right? Housing builders and stuff like that are just getting destroyed. No strength. Down on the year. What's up, IB surfing? I do find it interesting still that we have this green line kind of just steadily picking up here and the red line kind of flatlined. If this little divergence hold just starts picking up a little bit, could be a signal of something special to come here. I did look at Webull just a second ago. I mean, this thing is straight down. You have earnings around the corner here. Right, so earnings, all we can do with that is basically say we're looking at basically a one standard deviation move of basically $1. So this can be up to 9, it could be, you know, down to 7 for one standard deviation. Lunar. Yeah, a lot of these names are just these lower price names. I just don't get too involved in. Like, if you see, like, so, I mean, look over here. You see this little marking on my chart, right? This is what I look for. I look for things that have started to get, you know, prop up and then consolidate. And then bam, you get these good moves. But like, what's going on over here? Like nothing like that. It's just kind of chopping sideways. VRA. There's a lot of like dollar price names here. This is too low a volume for me. Yeah, it's like a couple 100,000 shares here, a couple 100,000 shares there, but it's like a $2 stock. So, you know, I'm not trying to go in and move this. So it's a little bit too liquid for me. But you know, to your point, right? These things, you saw some volume in, then it consolidated, then we broke out, and so forth. So it was a nice little pop there. But yeah, it's just I can't go into these names. It wouldn't. It'd just be a little bit. It just wouldn't make sense for me. ZM and Lucid, TEM. Yeah, we'll go through those. Qualcomm. Gotta wait for it to set up. There's not much of a setup here. You know, pop up, drop, whatever the case is. Maybe we start to do something like that, and then it starts to break through these and gives us better risk to reward. But it needs some time to set up here for me. Zoom video. You got earnings around the corner here, so can't really do much about that. But you know, you are seeing these higher lows currently as it's basing out. So that'd look nice. I don't know what earnings is going to bring. We did to Netflix. Lucid has been getting just absolutely smoked. Smoked. Yeah, I don't know. Maybe shorter term trades, right? If you're like trying to scalp it, okay, here you go. Pops back up, you know, maybe something like that. I mean, you're seeing a pretty clean divergence here on a 15-minute time frame, right? Okay, maybe shorter term bounces, kind of near in that area, but yeah, these things have this is getting. I mean, and we're closing at the lows of like all these trading sessions. That's brutal. Jeez, down 51% since just October, a month ago. It's wild, man. I'm sure a lot of these names are going to get bounces. Like this was, what was this? A 50% drawdown too? 53% drawdown led to a 62% pop. So basically a 61.8% retracement level, right? Bam. And then we, you know, sold right back off. So perhaps we'd see another thing where it bounces up 50%, right? 50% retracement of this sell-off at some point, right? Boom. And then maybe it comes back into. So, you know, we see this time and time again. And if you're trying to plan for that, if it's just the problem is if you go too hard, too heavy, too fast, you probably aren't going to catch the perfect bottom, right? That's the probabilities of catching the bottom are low, or the perfect entry are low. You'll probably have price go against you, and you got to be okay with that. So you got to plan for that. That'd be the more ideal thing to do, is plan for price to go against you. And by planning, I mean prepare, you know, a scenario what that might look like. On. Nice earnings reaction. Now just going sideways, but yeah, I mean, I like these bullish earnings, post earnings moves. I do, but not like really in just a bearish trend. So this, I mean, if you go long right now, I mean, your stop would probably be under this, right? That would, to me, make sense. And then if it pops up higher, awesome. Hey, thanks, Jimmy. You're welcome, Billy. TMC. Yeah, I don't, once again, these are a lot of these lower price names, and they're like off-putting, like metals. Like, I think they get on people's radars because of how fast they moved up, and, you know, the thought of them potentially going back. You'll get bounces, but like this is too, you know, just thin. There must have been some news over here, and then it just got faded all throughout the day. A lot of miners and stuff look good. Miners, I don't know if this is a miner or not, but you know, if we look at like something like GDX, right? They've been looking good. It's been setting back up. And if you look at silver, right? Silver has a very strong correlation to gold miners. So if you're bullish silver, chances are you're bullish miners too. Right? Notice how it's pretty much the same exact look. NVDA is breaking up a little bit. Let's see. Yeah, NVIDIA is starting to try to break back up to the upside. That's going to be helpful for the Qs. Little sideways price action, trying to get back above, go back into the daily IVOL range. We'll see if you can hold. Apple, still holding below the VWAP. Microsoft, a little bit of a bounce back into the range from outside of it. That makes some good opportunities when you're outside of the daily implied moves too. I like more blood, but you know, can't always get what you want. Meta, nothing. Amazon, only down 50 basis points. And that's back above daily VWAP here too. Still holding. So Amazon, it's still for the day, it's still holding these higher lows and it's still actually holding these lower highs. So it is consolidating here, as you can see. Okay. Hey, thanks, Kyle. Yeah, I did go over Target. I use I use Clorox as a chart to look, just to show people kind of what can still happen. But so it's at the lows of the trading session. It just hit a new 52-week low, low of the year. So right, if you thought this was a low, we're wrong. If we thought this was the low, we were wrong. Although it did make a nice little bounce, and now we have another low. And the reason why I showed Clorox is because don't ever think that it can't continue to break down. Like this was Clorox, right? It broke down and then it's just dragged on lower. So yeah, Target ain't going anywhere. Clorox isn't going anywhere, you know, anywhere soon at least. But yeah, these names have just been absolutely just obliterated. So you got to just play it day by day. And, you know, if you're trying to build positions in these, whatever your full size position is, start doing it in tenths. Do it small. You know, don't try to catch it perfectly. Because, you know, and if it goes in your favor, awesome. You can sell into strength, especially in a bearish trend, and then wait for this thing to, you know, really start to base out, build bases, and actually prove itself. The green line's been going up, but the red line kind of picked up here too. So, yeah, you know, it looks good here, but now that this is picked up, kind of cancels that out. So we'll probably just see some chop and pop. But if this, you know, turned back down and this started creeping up still, I mean, that'd be a little bit better of a sign for me. It'd be a much better sign. You think Target's going bankrupt in the next recession? Well, I mean, you never know. I've seen big retailers go out before. Target is that'd be pretty big. I don't know. I don't know about all that. Every Target that I've been to is always busy, always slammed, always being talked about by influencers. But hey, you never know. You just never know these days, do you? Only winner today was BFLY. Butterfly. I think this was on my tight list too. Well, it was over here for sure. And then I think I just was watching it here. And then this was nice little breakout here too. Yeah, look at the volume here. Like, look at the pockets of green volume. Over here, over here, over here, and even today. Interesting. Now, this is a lower price name too. And from all the lower price names that we've kind of looked at, right? These are the type of setups that I like to see. So, not too snabby. Now, that doesn't mean go and chase it after a 22% move to the upside. My name that did good today was ARQT. This was just a clean post-earnings consolidation. I sold a little bit on this day a couple of times because I ended up having too big of a position. And then I got to ride this up with the remainder. And I don't think I trimmed it today. I wouldn't mind trimming a little bit off, but that was a nice little trade. HXL was another one that I took. It was just a post-earnings trade. So, like, once again, these are the type of trades that I like, right? Nice consolidations. Price action tightens up. Price breaks out. Has a good risk to reward. If it turns back around and comes out here, I'm out, right? I don't care if I lose these small little tight consolidations. It doesn't matter to me. But when we do get one, a winner, it makes for a nice little, makes for a nice move. Do I think your biotech company could recover? I don't know. Which one is it? Name that did good was CRM today for you. CRM. Sorry if I'm missing some chats, by the way. If you get a chat and I don't respond to it, you can always try to retype it in until I see it. Don't spam it, but I'll keep an eye on it. Did you short it? CRM, did you short it, or did you just trade it to the upside, like a more extended move down here? UNH. Yeah, maybe. I mean, I'd still keep an eye on this stuff. It's a pretty big pullback into this little consolidation here. I'd kind of want to see this prove itself because a lot of the healthcare names have been doing really good. So I don't want like healthcare to all of a sudden come in and then all of a sudden those get hurt more. But you know, XLV, right, been doing great. There's a lot of stocks that have like Jazz. We watched this. Look at Jazz. For those that were watching the consolidations with me, that thing took off. Cardinal Health was one of them. That thing just ripped through. The Neo one that Matt pointed out earlier looked pretty clean. Just tight risk to reward. Yeah, Costco broke down. Looks pretty rough. It was consolidating here, and then we broke down here. So I would say for Costco, I wouldn't be in a rush to buy this. I'd be looking for price action to kind of just consolidate and, you know, shape back up. But we did come today into down here, which is basically the year-to-date low. We kind of retested that, kind of found a little bit of a support. So if we, you know, bounce back up, retest in these areas, if it can do something like that and then break higher, okay, that's one thing. But a lot of the times, right, lows, you know, weak stocks get weaker, strong stocks get stronger. Crazy buying into Qs. Let me see. Around 594 to 598. I mean, maybe it has something to do with just being its lower implied move for the month, just right in that range. But so you get a lot of hedging activity here. You'll get even more if you break from it. We're kind of just floating in and around those areas. Oklo. Yeah. I mean, you get a larger structure consolidation over here. So yeah, it might be setting up for a little pop, but a lot of these names have been just brutalized. So once again, like these, you got to look for, there's still wide range candles. So the tighter consolidations are a little bit cleaner. And then this is kind of like the end of the move consolidation where you get a lot more volatility, right? I mean, look at this thing. It way, you know, like I remember looking at it down here and then here and probably over here. Oh, and then over here too. I mean, so like you come back to these areas and you see these spots set up. That was at $8. I ain't ever going to think that it goes to 193 from $8, but there you go. Yeah, I don't, yeah, where they might go turn back down if you're trying to short something like this. I don't know. You might look at this as a head and shoulder. All right, so maybe it comes back up to 130-ish range, sets back up to the downside. But if you shorted up in here, some great trade. Great in hindsight, at least. Wasn't like SanDisk, like SNDK, or what is SanDisk? Yeah, SNDK. Yeah, look at this thing. This thing has been just a straight rocket ship up. Like, what is this even doing? It's crazy. No real substantial break here, too. It's just consolidating. What is going on with SanDisk? SPY is pretty pinned. Pinned. Yeah, I'm going to stay through earnings. When is the NVDA earnings? It should be just after the market closes. Maybe what? Is it an hour or is it 30 minutes? What are we doing here? Do we have the time? I'm going to pull up the expected moves when it's coming closer to market close. I don't know if this is right, but it says 4 p.m. Central Time. Nice, exotic. That makes sense now. STX, WDC. Yeah, some of those names have been just killers, right? Yeah, crazy. Wild. Duolingo. See Duolingo. Youchies. This is why it's important when you get consolidations to get out if it breaks and goes against you. Imagine holding it from 500s to 172. Yeah, so you have a big bearish earnings move here, and now it's like, so the thing is, if you think that this is low, you're probably incorrect, right? So you might get bounces, might go sideways for a long periods of time, but these substantial breaks, you got to be very cautious about. XYZ suspended, or was it just halted or something like that, or what? XYZ looked good. It was shaping up right here, but we broke lower, so it's not on my radar anymore. You might get, bounces back or so forth, but kind of gets off my radar at that point. We can look at like HGX. This thing is still just snapping down, which is not a great sign. This has been falling, diverging from the S&P 500. Not a great look. Remember, these things, there's so many names and so many parts of these markets that have just been absolutely and utterly obliterated. And this is what's really kind of getting people very, very bearish. And when people get very, very bearish, right, there's opportunities in that. But the opportunities, right, you really need to be patient. Really need to be patient and really need to start small, because you don't want to fight. I guess one easy way to put it is, if you look at a name, it fell 50%, it can fall another 50%. And from that point, it can fall another 50%, right? They're working kind of geometrically against us. Losses. DLO. Yeah, we'll pull up Palantir too. Let me look at DLO. Just really, it's pretty sloppy. This is pretty sloppy. These earnings is out of the way. I was looking at it here, a little bit more tighter consolidation, but it broke down. We never had a continuation move, and it broke down. So for me, I like these things to shape up a little bit more. But this one, it's just a very kind of sloppy name. Very, big gaps, very choppy. I'd wait for it to tighten it up. If it came back up in here and then started to shape back up, then maybe, I can create a little bit better of a trade idea in there, but it's just a little bit too all over the place as of right now for me. TEM. We're getting tight here. We're consolidating. So that might open the door for a little bit of a pop. You're getting above the 5-day moving average. It's starting to flatten out here. So there's, this is a possibility for TEM. You'd have a stop down here, a stop down here for smaller move, right? Just be mindful that if it breaks down, be very mindful of that, right? Like I was about to do Boeing over here, right? Boeing was getting back above its 5-day moving average, tried to break out here, but then it broke lower and then continued lower. So you have to respect that breakdown, right? So that's just to give you it looks kind of similar, right? It looked, what was the name that I just pulled up? It's TM, right? TM, right? It's kind of doing that same thing. It's kind of putting the higher lows. It's starting to get above the 5-day. We're getting some sideways price action. Perhaps if we start breaking up higher, go to fill this gap, starts to turn into a good trade setup. Absolutely, right? But just respect it if price continues to break lower. Take a look at some of these bigger players again. NVDA holding, daily VWAP, Microsoft just in the eyeball range, Google. Trying to find a little bit of a base down here, I guess, after its initial know, move higher. Amazon down 50 basis points, still not doing anything. Meta is the big hit, 2.21% to the downside, down on the year. That's that dash line right there, and still looking pretty weak. I was thinking maybe we go and touch that lower trend line, which is still, you know, a percent or two off, and see what price does around there. So if you start small in something like Meta down, you know, where we're at, just be prepared for maybe even an undercut of this trend line and see what it does. So you have to be okay with, you know, it going a percent, 2%, maybe even more against you. Welcome, AM Jan. Yeah, very strong. I wouldn't be starting new positions up here, but look for consolidations in the healthcare space as a whole, right? Or, you know, pull up ETFs, pink. Look at this thing, rocket ship up. We looked at, you know, even a 3X fund, Cure. Look at this thing, broke out. Now it's consolidating, right? Just like healthcare, like XLV. Healthcare's been killing it. CRWD. Yeah, this one's been doing good too. Seen some nice consolidations. I traded this over here. Saw a nice big move, and then I forgot to enter in either here or here. And now it's just kind of pulling back into this area. Not a bad look. Holding up rather well within these market conditions. Cisco, also very strong. Look for consolidations. We're a stone's throw away from another, once again, new highs. Let me lower the amount of years that I got going on here, so it makes it a little bit easier for me. There you go. ACAM. Looks pretty good. Post-earnings consolidation taking place now. So you get a big earnings move up. Now we get, you know, 7 to 10 trading sessions of consolidation like this. I like that. Where we go to retest these highs and potentially, you know, go for 100. I like those type of setups. Thanks, Gilla. BTC could be a leading indicator to NVIDIA. That's for sure. I guess we'll know in hindsight, right? MicroStrategy, PFE, MSTR. Yeah, MicroStrategy, I was thinking maybe we get down to the lower weekly down here. It looks like it's kind of heading back there. Once again, I prefer like a much more stronger move. And now that we just doodle around and we're coming back, like, right? I hate that. So I have a alert just to set up, just give me an idea of when it might be coming down to the lower weekly. But now at this point, like, I don't like how it's trading here coming into it. I wanted this thing to be basically a straight shot here. So if I was to do, you know, once again, like one of those fade trades, you know, it'd have to be probably even smaller than my initial. Maybe even underneath the weekly implied move. But yeah, it's just weak. Just weak, right? Weak. Very, very weak. Do-do-do-do-do-do. SPY popping a little bit here. I want to take a look at market net flow. I like the green line going up. We do have a little bit of convergence here. The red line's kind of been creeping with it too, which is annoying. But man, if this thing starts turning back down or this starts cranking higher, I like that. Palantir. This thing, okay, so once again, this went on a monster run. It's going to take some time to consolidate. This was a nice little setup here. Produced a nice pop, right? But now it's reversed that. So fake out, you know, breakouts like this that are reversed can lead to pretty fast, significant moves. So you really need to see this some more time go by to feel confident buying a stone's throw away from these highs, right? So you got to be pretty diligent on how you set trades up. If you're trying to like intraday trade it, right? It all depends on time frame and stuff. You'll have plenty of setups, consolidations. Back up here, 166, right? Probably by today, right? Boom, right to VWAP. So you'll have a lot of different intraday type of setups. If you're looking for, better swing trade setups, maybe back above a 5-day where it flattens out, starts to turn back up, tells you that the market now could become a buyer. The trend is changing on a shorter term. Then that might be a little bit better to play for a pop-up higher. So the time frames always depend. I already looked up grab. Basically, it needs to prove itself. Either turn back around here and start to consolidate, or come down and just come try these levels. But I did like these large levels moves here. This was the initial setup that I traded. And then we saw a big breakout on just massive volume over here. And now it's been pulling in. So just got to see how it sets up. I'm not playing NVIDIA earnings, but I will be, we'll have it. And I'm going to give you the expected move of what NVIDIA is being priced in for earnings. So right here, $13.83 right now of expected move for earnings. You think NVIDIA is going to moon hard? It very well may. I mean, I would imagine NVIDIA earnings are going to be good, but I don't know what guidance is going to look like, and I don't know how the market's going to anticipate it. SPY cranking up a little bit here. We have been seeing market net flow kind of uptick, like we've been saying. The red line's kind of flatlined here. So the more we get this kind of vertical move in the green line, the better. Hey, what's up, Colby? Oh, we're coming to the final hour now. 40 minutes. Take a look at NQ. Had that scary sell side over here. The massive downside tick reading. Let's take a look here. So that was at what time? About 9:37 to 9:40. Let's go to the tick readings. I didn't trade it. I was day done already, basically, for me. About 11. Oh, so gosh, my timing's all messed up. So 11:26 is when we got that. So I don't know what my timing's at. Bummer. I had to set up the same time. Is it the same time? Let me see here. Where are we at here? 12:16. And right now we're at, no, it's the same timing. Is it the same time? 12:16. Yeah, okay, it's the same time. So this was at 11:26. So right here. And then this one was a little bit earlier in the day. So 9:38. What was here? 9:37, 9:38, right here. That was this one. So right in here, and then that other one was right in here. So the reason why I'm sharing this is because if you do trade the ticks, right, you don't want to go too heavy too fast on that either, especially if you're trading futures. But notice how these extended tick readings marked shorter capitulations in the futures market. So, there's a lot of opportunities within there that, you tend to get more readings like this when you're in negative gamma, which we are. So they create opportunities, but if you go, once again, too heavy, too fast, all right, it can keep going. But if you do, a couple NMNQs, right, and then do risk out, right? So for example, something like this, if you bought, one or two, and then you see a quick pop, 10, 20 points or whatever, you can risk one out. And then all of a sudden your risk parameters change dramatically, and you could hold it, see where it goes, or whatever the case is. And same down here, if you bought one or two, let's say MNQ, or NQ, whatever you trade. I don't, whatever you trade, how big your account is, it don't matter. Maybe you got a little bit of risk out on the first bounce, and then you just said, all right, now I'll do break even, or I'll, give it some space and see what it does. Pretty cool. I love this rocket ship going on right now. That's great. Hallelujah. Coming back up to the week-to-date volume weighted average price right now for SPY. Let's see if any of my yesterday's price action trade stuff set up. So we'll look at Meta, see if it came down lower. It's still at the year-to-date close price. So still Meta looks, this is just not participating in many of this, but Amazon is now positive on the day. And that one I did do a position in down in this range. I started one. So it's already in my favor, which is fine, I guess, but I didn't get to like do that good of a size or anything like that. So fake viewers, I don't know about all that. I mean, I only have 500 viewers, and I don't know about fake viewers here, and I got 6 viewers on Twitch. Don't have a crystal ball. It's completely random gambling. No. No. I mean, it's risk. It's managing risk is all this is. Hey, we had a super chat come in from Jimmy John. Thanks, Jimmy John. I just seeing that now here. I want to pay more attention to this stuff, but a super chat from Jimmy John. Thank you so much. And we have a couple of people subscribed. Everyone's like, I'm real. The hell is this guy talking about? I'm also fake. That's good. Some people are so weird. Just like, you know what I'm going to do? I'm going to go on somebody's live stream and just be just a weirdo. I'm really fake. I'm going to get a bunch of fake viewers. And so there's a tick reading that actually went more positive. So let's see. That was the highest tick reading of the day, I believe. Not over 1,000 yet, but, you know, now, you know, this could be a period where NQ wants to settle in. Yep, I'm a bot. Sheesh. Green line's been cranking up, which we like. The red line's just kind of flat there. Let me take a look at... I forgot that I did have something here, and I think I still had it at least. Yeah, Microsoft. Let me see. We love rips. We love it. Thanks, sir, for subscribing, Eugene and Isabella, 20 minutes ago, subscribing. Appreciate that. To the YouTube channel. I do lives on occasion, but I do market briefs too, more frequently, where we kind of set up ideas for trading, like Amazon and Meta. That was a couple of them. We did MicroStrategy the day prior of a potential setup. Nice. Nice, nice, nice. Bot here. Bounce from a 325 weekly EMA. For what equity? That's a big EMA. I've never heard it use that one before. But I mean, sure. All right, let me close that out. Okay, Amazon. Love it, dude. I love it. I love seeing it. We're getting them moving Amazon. So these were the level kind of that we were watching there for Amazon on yesterday's video. And we're seeing a nice little pop from there. Go right from that level. You know, up 1.61%. But the day, it's flat on the day. For all we know, this can be breaking this tomorrow. I don't know. But if you did the day trade, right, it's always important to think about risk out. Hey, Colin. Probably, I mean, earnings, it says 4 Central. I'd have to probably pull it up more specifically, but it's going to obviously be after the market closes, right? Which is a little bit later. And we'll see. We'll see. It's, you know, maybe an hour at most, typically. Maybe 20 minutes we start to get the report, and then maybe then they do the earnings call. I don't have it on hand right now. You're welcome, KW. Yeah, it's telling you if other trading communities kind of wrap their heads around what's going on, the price action. Okay, so when it comes to trading, people think like, hey, an indicator and a strategy. But what they don't understand is that a strategy that's trading your price action, risk to reward, right, is one thing, right, or whatever, like, okay, or indicator, sorry, like an indicator or a certain time frame, whatever. That's your strategy. But people don't quite know now you need to understand what the market conditions are for that strategy. So you need a strategy around market conditions and what changes market conditions. And then on top of that, you need a position sizing strategy. A position sizing strategy around that. So if you're just looking at one thing, you're probably not going to do all too well until you start to realize, oh, wow, I need to understand when it works the best and what strategy I need to use for when market conditions change. So you typically need more than one strategy if you want to trade through different environments. And then you need position sizing strategies for each of those. And if you don't have that, you're not fully full-rounded of a trader. You need to look into it. You need to find it. You need to adjust and so forth. But a lot of people think they can their strategy is going to work great every time, right? They crack the holy grail and it works, but then the market conditions change and then all of a sudden it stops working and then they try to force it and it just goes against them or they blow up very quickly, not understanding that, dude, the market shifted. It's not your strategy. It's the market conditions. And then they're like, okay, this strategy doesn't work. Let me find a new strategy. No, you need to understand market conditions. And however you base that off of, it's entirely up to you. I show my way of how I determine market conditions, but other people might say an ATR of plus 20 is a certain type of environment where I day trade NASDAQ futures and I don't mess with that, right? Or, or whatever the case is, like over 20 ATR on NASDAQ futures, that means we're in much more of an environment where I maybe look to something like ES, right? Or 25 ATR or, whatever the case may be. However you decide to determine it, right? However, the red line go down, green line go up. We've had convergence over here. SPY bumping his head on the week to date VWAP. Let me get some of this out. Okay. Trading is gambling with all the fun of gambling. I mean, everything in life is a gamble. When you think about it, we're surrounded by risk, right? It's a gamble to hop on an airplane, right? You're basically losing, you're giving up control to somebody else, and there's uncertainty in that, just like there is with going to a blackjack table. So if you start to frame it like that, you'd be probably better off. Everything in life's a gamble, so just get good at managing risk.
Hi, I'm Matt Arbaugh, owner of Paint.
Wait a second. I can't play certain songs on what's it called, but yeah, apparently I can do these AI remixes. At least I think I can. I've been bothered by it. Somebody said put on chill music. Because it's not technically their song, it's an AI version of their song. I have no idea what's going to play. Has anybody heard this stuff where it's like they just do remix visions? It's kind of cool, some of them.
Chrome cufflinks and a gin and pine. Hush the talk, let the group define. Every glance
What gave me the confidence to go full time?
words drip slow like the most school.
I mean,
I don't flex loud, I let it breathe.
having cash flow and you know, I have, you know, it's not like this is my only stream of income. So if you have another stream of income, it's highly recommended to have another stream of income if you're trying to trade full time. And then also, incredibly important, and why most people fail, most traders will fail, not for reasons that most people expect, but typically most traders fail because they're undercapitalized. Believe it or not, that's probably the number one reason why traders fail, because they're undercapitalized. I didn't add pressure to myself going full time, no. But the thing is, like, I'm not going for home runs, right? I'll make some money here, make some money there. I'll take it out and I'll spend it. And you know, this recent big win was I was utilizing a prop firm, and you know, I spent $2,500 on their challenges or whatever, and got 80 grand out of them, and I spent it all. So undercapitalization is huge, because say if you have $10,000, I mean, you can't trade full time with $10,000. Like, you just, what are you going to do? Like say if you want to make 50 grand a year, you'd have to 5x your account. Good luck. Like, you can't do that over and over again. Plus you'd have to pull the money out because you'd have to spend it, right? So I don't know, maybe to be like actually a trader where you can make a good income and not have to like worry about trying to do 100% gains every year, maybe you need like $500,000, to be quite honest, right? $500,000, $250,000. Actually, probably more than that. Yeah, I would probably say anywhere from 4 plus, right? Because even 250, like you can do great with that, right? But you just can't push limits. So you got to focus in on like, okay, can I make 2% a month or 1% a month? Like, you got to think small, especially if you want to do this full time. Because if you break 2%, 3%, you can make that back. But if you have 11% day down or 10% day down, that will dramatically affect you. Not on a $10,000 account, but it definitely will on a $250,000 account. You can do 50K, make 1% a week in the markets. Maybe, but that's also, I mean, think that through. There's 52 weeks in a year. So you're saying I'm going to make 52% every year. So you're making $25,000 a year, if you take that money out. And that's high risk, right? Like, you can make 50% a year, right? Like, so last year in the investing championship, I did 45%, right? This year I'm up 40%. So it's possible for sure. But I would much rather make 50K a year on a much larger balance, not risking huge amounts in my portfolio. So you can utilize prop firms, right? That's one way to leverage money, but you have to go under their rules. Or you start small, you become consistent, you build the right habits, and then you add to the portfolio. And then when you have your big win or whatever, and you can take some out, spend it, feel the money, make sure it's real, right? A lot of people forget that. They're like, like, sometimes I forget about it. It's like I'll have, multiple, 1,000 day, and I'm like, whatever. But then I think to myself, I'm like, wait a second. If I just had $1,000 cash in my pocket right now, I can do so much stuff, right? You got to start thinking in terms of like, how many weeks of groceries is this? But it takes time. So utilize your full-time job and then build it, right? Full-time job, part-time job, build the account thoroughly, slowly. There ain't no rush. If you rush, you're going to run into problems. And being undercapitalized means typically that you take more risk, right? Right out of the gate. Say you have a $10,000 account, $5,000 account. You're going to take more risk to try to double that. Congratulations, double, triple your money there. You still have nothing, right? You still technically have nothing in the grand scheme of things. Like, that's not life-changing money, turning $10,000 into $20,000. It ain't. Not these days, right? it might be a big impact in your certain situation, right? That's good. But then take it out and make sure that it's used correctly, because you're not going to be able to double it over and over again. And if you keep trying to double and double over again, you're soon going to lose 80% of it. And then it's going to go to zero. So people hear the stories, right? They hear the stories of, oh, but this person did it. It's like, yeah, there's always going to be the outliers on the distribution curve, and that's going to happen all the time. But what you don't hear all too much about is the other side of that. There's a lot more, a lot of people that lose and, break. Yeah, some people don't, yeah, for sure, they don't consider taxes on the capital gains too, which is important to know that you got to pay that. When people ask me like, well, like, oh, you made this much, so you got to pay this much in taxes though. It's like, I don't care about that. Like, I prefer that, like, versus me not paying taxes on gains. That means I'm just not making money trading, right? So of course I have to pay taxes. And some people, like, for example, myself, like, I trade in a Roth IRA too. I'm not taking that money out, but I'm trading in a Roth. I'm not taking it out yet. Yeah, 3 standard deviations ago, they go both ways. Yeah, you got to fix that, Zunair. Yeah, you gotta just make the decision to say, I'm gonna stop this. I can't do this anymore. Like, I can't do that. And the problem is, especially with kind of like the mindset of that, like in a gambler's mindset, is they take the big hit, they get over it, and then all of a sudden they forget it, right? Think of hedonic adaptation, right? Hedonic adaptation is basically, a mouse on a treadmill or whatever. They're like, they get something new and fresh, and then they get used to that new, like you buy a car, and then all of a sudden after 5 months of owning your cool car, all of a sudden it's not like, you don't got that same feeling anymore. The same thing goes for people that blow up an account. They feel sad, depressed, right? It's like, oh, this sucks, dude. But then all of a sudden 3 months go by and they're like, you know what? I can come back and I can do it again. And then they go back into the same kind of wheelhouse of hedonic adaptation. So that's an internal battle. Yeah, that has to be changed. Internal battles have to be fought by the individual, and however you decide to fight that battle, right? There's not going to be somebody else from a book that fixes that for you, or somebody that tells you how to do it. So RSP. RSP, are we talking equal weight right now? What time frame? I mean, it's not looking all that great. It's looking pretty choppy over here. I don't like this stuff when it like expands in volatility. But, equal weight has been dragging lower, going sideways since basically August 21st there. So if I pull up SPY, if we go to August 21st, right? That's right over here. Market's been going higher, but equal weight's been telling a different story, which is a little bit of a divergence. Yeah, exactly, Richard. Yeah, Sanity, do the same thing, different results. Thanks, RK. Yeah, I see block flying up. I'm getting alerts right now, hitting 2 standard deviation moves. I don't know if there's news around it or not, but didn't we talk about this earlier? We're like, yeah, oh my gosh. Yeah, so there must have been some sort of a news break. Somebody just brought this up too. So I don't know if maybe there was news around this. Oh, they provided 2026 earnings per share outlook. It halted it. There you go. There's a crazy move. News driven. Woohoo! I wonder if anything like PayPal or what other kind of names, like, is anything moving all of a sudden? Just wait. I don't know if this is correlated to it at all. Kind of look like that. No, not really, but it's kind of moving. It's around the same time. Amazon holding up positive now on the day still. Meta off the lows, but still big laggard, 1.77%, and it's butting its head to the daily VWAP, coming into the last 20 minutes of the closing session. It's always important to watch these intraday trends, right? Because sometimes when these bigger trends break off already extended moves, you get nice pops, or it tries to find itself a bottom of some sort at some point, right?
make silence sweet. They pay for the hush and the heat. Got brass in my band, bourbon in my glass.
Hood ripping. Yeah, Costco recently just break down on the daily. It's kind of coming back now off this prior year-to-date low level, but it was coiling up for a while, huh? And we just saw a pretty quick hit there, and then hey, thanks Clinton for subscribing to the channel. Thanks, Garce. And remember, another thing on the whole trading aspect of stuff, a lot of people, right, they think like it's just like one or done, right? Like, oh, I got a swing trade or whatever. Think of things in buckets, right? You can be an investor, you can be a swing trader, and you can also do day trade. Now, when it comes to day trading, I would probably not use a large portion of your net worth in something like day trading, right? So if you're day trading, I would say keep that a lot like smaller portion, because there's a higher probability that people, and notice how time frames go smaller, right? So time, so this is large to small, and this is time frame, time. The smaller you go, the higher probability of failure. So 95% of people fail here. Let's say, I'm just giving a random number. 5% of investors fail, right? We'll just, whatever. I mean, we're at all-time highs, so is that really the case? And then, swing trading, we're talking like, a better hit rate. And this is just fictional numbers, but there is data that says 95% of day traders fail. So with that, in mind, if you're day trading, use a smaller portion of your net worth, right? Or your main account, right? Smaller portion. If you're swing trading, you're looking at a little bit larger time frames, day trading in and out of certain various equities. Sometimes you swing trade within investing, right? It's could be sometimes hybrid, but maybe this is a little bit more, right? Maybe, for example, you day trade only 5% of what your net worth, and got to work with the numbers with whatever work best for you. But maybe for swing trading, you can do more about 10% to 20%. Right? Like 10 to 20% of your net worth. And by net worth, I mean like everything that you have, your own, whatever your net worth is. Like, do the numbers yourself. There's no, right? I'm off the cuff here, figure it out for yourself, right? What best for you. But then investing is another bucket. That's where you buy passive index funds or, various funds or whatever the case is, ETS, less volatility, but you're looking out a lot longer. And then that, that's a larger portion. All right. So, whatever, just 70%, right? Or whatever, or maybe you invest a certain amount per paycheck or whatever the case is. So that's the bigger account. You don't really touch, you add on drawdowns and whatever. It is what it is. You're looking out farther. Don't worry about that. Then you focus here to make some additional income. These are income generating, right? And then you have your full-time job, right? Feeding into expenses. And then also potentially feeding back into your longer-term retirement accounts. Your full-time job can pay off some debt, or maybe you can use this to pay off some of that debt too. And just fix your four walls, right? You make sure that you have your expenses paid. You have an emergency fund. You're paying for your housing over your head and all your bills, like utilities. There you go. There's a roadmap to success. All right, let's go over here. Spy's still doodling around his week-to-date VWAP. Buy funds like MSTY or UTLY. Yeah, no. Please write a book. Maybe. I don't know. I've been writing one, but for my son. That's not really like a public thing. But maybe. Well, it looks at somebody PCC and only trades Qs and SPX without debt for it. I'm not too sure I understand that question. What would you call someone who looks at PCC? So I'm not too sure I understand. What's PCC? Looks at PCC. Book, not the call ratio. I'm not. Heck yeah, interview for sure. Yeah, the market condition, man, big piece. What do I think about buying NVIDIA? Oh, I'm not. I don't mess with the pre-earnings stuff. There's things you can do like earnings butterfly, kind of like butterflies. you can do something like that if you kind of have a bias of where you're going to go. But for me, I'm not trading it. I would imagine it's going to be a good earnings. I don't know what their outlook is or whatever like that, or their guidance, but I can tell you this. We're about 18 minutes out. We have about $14 of expected move for NVIDIA. All right. So this is one standard deviation of risk. $14 from where we currently are can bring us up one standard deviation. Remember, we can do 2 standard deviations too. Right about 200. Just feels small. It just feels small. Okay, so I'm gonna just go ahead and activate this up. No. So we're looking at basically around this for the expected move, one standard deviation of risk, right? So think of things in terms of distribution curve. That was a horrible distribution curve. That's a horrible oh my God, I suck at drawing them sideways. Yeah. That's one standard deviation of risk. So Colby, if I had 25,000 and I want to get started, how would I proceed? In fact, we are so near parabolic all-time highs. Oh, it's for like investing or for like day trading or for like swing trading or like a combo. And yeah, it would depend on time frame and like what you're trying to do with that, you know? So it really just depend. Meta, somebody had mentioned Meta. What's going on with Meta? Yeah, Meta's just butting its head on daily VWAP. It does look like it wants to try to pop through here, but it hasn't yet, and we're at the end of the day. Did NVIDIA hit the daily EM? It may have today, but the daily expected move, I think it did. At least on my end, I don't have it in front of me right now, but if I pull up NVIDIA right now, this was the daily implied move range today, but we still have earnings. So earnings is expecting, you know, move up to 200-ish, down to and around 172. That's just one standard deviation of risk. Remember, we can see these things go 2, 3 standard deviations. Who knows what they're going to say? All right, we'll adjust it when we get a little bit closer here. We got 15 minutes still of trading. What song is this? I don't know, because it's like a long mix for like an hour on YouTube. It's called 1 hour of the best 1950s soul versions. That it's just taking popular songs and converting them to soul music. I don't think NVIDIA is going to miss earnings, but I don't know. I have no idea. I would imagine that they're going to beat, but I don't know what their guidance is going to look like, and I think that that's what's going to matter to the market. Qs, the expected move for what? The day? Today? Today's daily expected move for the Qs was bonkers.
Your biggest fear came true.
Are you talking like week or something? Let me see here.
Luckily, you have
Yeah, the expected move for the Qs was $9.45. Absolutely bonkers.
when you're chasing down leads.
Did it hit it? Sorry, I got an ad. Here we go. Yeah, we hit our daily expected move on Qs today. To the upside. It was $9. So the upper level for Qs today was 605.76.
don't come where the street lights glow.
So if you watched last night's market brief, we said 605.76, right? I think I shared it. Look at that.
They want my soul, but I sold a share.
How's that for a daily expected move? One of the largest we've seen in a little bit. Came up to it perfectly.
When the money got tight,
Yikes.
still pray soft in the dead of night. Mama said, baby, don't lose your crown. But the city loved kings when they cut them down.
When I cut them down.
On my teeth,
If I was a gambler, would I buy puts or calls? I don't know. Probably it's probably neither. Still, because the implied volatility is just probably blown out.
I've been walking through the rain.
I don't really trade options, so I usually trade just the equity itself. So there's that.
But I don't feel the pain. Angels don't come where the street lights glow. I keep my faith quiet. Mercy on the low.
We're coming into the closing belt.
I talk to God.
NVDA be reporting here soon. Let me see. I just want to make sure. I'm like,
Baseline, ghost in the track. Every prayer costs more than a chain. Every win tastes like somebody's pain. I don't cry, I collect what's due. Learn my truth in the things I lose.
that's a funny meme.
Love to
This guy. That's funny.
carry no more.
Okay. Let me see.
Through bars and settle the score. Mercy don't shout, it hums in blue. Old soul rhythm in the things I do. I walk slow, let the sinner sing. Pain got wings, but it don't mean a thing.
I couldn't tell you, Full Magic, if it's good for 1 year or not for something like Meta, but I will, I'm just saying that it is pulling into an interesting level. Remember, on a big break like this, the suggestion is on a big break on earnings, the thought would be, weak stocks get weaker. But we're pulling into an interesting area of confluence, last year's closing price and a rising trend line that we haven't seen. If I go back to a weekly time frame, it was the 2022 low matched with the 2025 low. And we're kind of pulling into that area. So yeah, we can potentially get a nice bounce at some point, but I wouldn't be shocked to see the bounce faded. All right, we're coming in, final 10. UNH. Yeah, so healthcare's been doing great. UNH has kind of been coming in a little bit here. So I'd be focusing on some other healthcare names, but I've traded this multiple times. I like these setups here, and then we came into this area. So yeah, if it sets back up, awesome. You do have that, gap fill over here potential, right? So yeah, there's that possibility. If it comes there, maybe then set your sights there. But right now, an entry right now doesn't make sense to me. I'd rather buy it higher after a setup than buying right here on this. And the only reason is because healthcare has been doing good overall. So if healthcare all of a sudden starts to reverse a little bit, is this going to go down harder with that news? I don't know. I just rather focus in, because healthcare has been doing so good, I'd rather focus in on some of the other names that have been doing good. Matt, it's kind of a mix from 1950s soul versions of just songs that have been reiterated, AI versions of popular songs. I like it. It's good. Just chill. If you're looking to learn how to trade, if you're just a beginner, where do you start? Maybe start with learning how to just kind of read charts. It's a help to timing, but I wouldn't think go too far past that. Learn charts, the principles of technical analysis. Start there. Trading's easy. You just click buy and you click sell. So there's a lot of psychology around, that keeps people from winning. But if you can, better understand principles of technical analysis, all assets and stocks, they move through periods of contraction, expansion, right? You don't need to get like people get so hung up on the names of patterns and the certain patterns, but all patterns to some extent, they just go through periods of expansion and contraction. That's all it does. So you understand the principles there, understand emotions behind candlesticks, and become kind of more robotic in the sense of being able to read charts and setups. And then you can, once you understand that and understand trends, right? It'll help you greatly with feeling a little bit more confident in executing. And you can add in some fundamental stuff for longer trades, right? Fundamentals definitely are a driving force behind price action, but price action is the one that proves it. And price action sometimes could front run it. So it's always important to watch price, but fundamentals can be a driving force behind all of it. So a lot of ideas can come from fundamentals, right? Or macro environments changing. And then it puts you in focus to proper trade ideas, but those trade ideas may not be set up yet. And that's where the technical aspect comes in. The position sizing, the execution, and so forth. All right, final countdown. We got 3 minutes. Sorry, we're at 53. We have 7 minutes till the market closes. Fundamentals don't matter for AI. I mean, a lot of that is market flow with AI, but it could very well matter, right? Like in the flip of that, you might say, well, why is Rigetti so high, right? Why was Rigetti up here? RGTI, right? Righetti's way up here, and you might be looking at this and be like, the fundamentals don't make sense. And you might be looking at this as an easy short,
Step into the world of Nespresso.
right? So then in fact, the fundamentals did matter. But over here, you might be looking at just more technical setups and more like hype around it. And you could see potential pops and stuff like that, just trading from a technical basis. And maybe they'll matter more down the road. Maybe fundamentals will start to change, get more positive. I don't know. But they can definitely pull trade ideas into your favor, or, you know, macro models can potentially point you in the right direction of sectors, industries, and so forth. And then within there's fundamentals within the particular companies within the overall macro, right? So you have your kind of cloud of macro over here. You know, some people just say they're macro traders, which is crazy hard. I could probably beat out most macro traders if they're not using any sort of form of technicals or fundamentals. So you got your macro traders, but then they look into the individual industries, sectors, and so forth, and they're looking at individual companies. That's fundamental. And then you got technical execution. Nice little pop over here. I'm seeing, is Meta moving right now? Is Meta coming off the lows? Come on, Meta. Let's go, baby. Like, through the daily VWAP. There's the nice pop. See, there you go. So here's a nice little tight consolidation. Finally broke it. Looked like it was going to pop. It did pop. Fortunately, it's at the end of the trading session. But nice. Amazon up 11 basis points on the day. Made a nice little recovery off today's early morning. Oops. Pretty intensive sell-off there. We'll see if we can get some traction. NVIDIA can change all of this, by the way. We know this, but we're pulling up closer to the NVIDIA earnings. We got 4 minutes left. Nice move today with NVIDIA. We're going to go ahead and look at, kind of zoom in here a little bit, and we're going to look into the trade tab. We're going to say, okay, it's about $14 of expected move. Okay, so the market for 1 standard deviation of risk, remember, 1 standard deviation, 68% of the time, we're probably going for those levels. It's about, you know, a little bit higher here. You know, right around here. It's going to be a little bit of a zone. Okay, so we're looking at about that for the expected move. I'm going to turn off my eyeball, because those don't matter. Not with earnings. Gonna look at it like this. All right, everybody. Thanks for tuning in. We got about 1,000 concurrent viewers. Thanks for tuning in. You're probably here for the NVIDIA earnings. If you're new here, make sure to subscribe to the channel. We do market briefs. We go over the market. We look for setups. One of them today played out really well. The one in the other trading session played out really well. you know, if you like this type of content, make sure to check out the market briefs and watch it. And if you think like, if you want to be like, hey, what was he doing during the market when it was selling off like crazy? What was he saying before that? Or, you know, whatever the case is, go to the videos from back then and go look at him. What was I saying? How is it positioning? Because now things are getting very bearish. In the last video, I was like, things could be setting up for a little bit of a pop on some of the names that have been selling off hard. Alrighty, 3 minutes to the close. Buriam, yeah, thanks for subscribing there. We had Arben subscribe to the channel. We had Tom subscribe to the channel. We had Artan subscribe, Hidden, Harmony subbing to the channel. GZ, thanks for subscribing to the channel. Richard, thanks for subscribing to the channel. Rip, thanks for subscribing to the channel. Mike, thanks for subscribing to the channel. Thank y'all. We fake viewers love it when you're live. Fraud. You're funny, man. Can't wait to see my camp level up. All right. Are we doing like anybody? How's everyone feeling? Like, what are we feeling? Long, short? Is anybody trading this or waiting? You want me to do a poll? Good afternoon, Zolf. Start a poll. NVDA earnings. NVDA earnings. Should we fade our group or should we go with it? All right, get ready to do the poll. Poll's opening up. That's going to be, will NVIDIA earnings save the market? Start the poll. Will NVIDIA earnings save the market? Yes or no? Yes basically means, yeah, it's going to be bullish. No means it's going to be a bearish reaction. Let's see what everyone comes up with. I'm going to come over here to SPY, coming off a little bit here. Just doodling around the lower weekly implied move still. It's not far off of it, right? NVIDIA is still kind of flat. Meta, nice pop at the end of the day there for Meta. I like seeing that, especially at the levels that we were kind of watching for, you know, these lower trends and last year's closing price. Same thing with Amazon. Nice recovery as we came into these lower trends here. So if you got to trade that, congratulations. You made a nice little day trade or potentially maybe a good swing trade. All right, we're gonna go into NVIDIA chart. Should be coming up. It might take a while here to get our report, right? So with that said, we can get a more accurate reading on our expected moves. 1379 was the expected move. It's basically right there. I'm not going to move it. And then we have 13. Yeah, just a little bit higher right here. All right, so the expected move. Whoa. Expected move for NVIDIA, ladies and gentlemen, is going to bring us for one standard deviation of risk up to and around 200. I would be expecting us to tag one of these down here to and around 172. Okay? Yeah, I need a drink. Okay. Guess I can look to see when earnings actually is. It will dump so bad. Predict dump. That's what people are saying right now, some of them. So far, we got about 60% say, yeah, it's going to save the market. 40% is going to be a no. Got about 500 votes. Let's see. We'll give some more time. Yeah, NQ coming off just a little bit here. Let's see what market net flow did. Market net flow is getting rather bullish, actually, towards the end of the session. I wonder if that's a precursor. Seen it before be a precursor, but... Rashad, thanks for subscribing to the channel. Mohammed, thanks for subscribing to the channel. Lewis, thanks for subscribing to the channel. Sandra, Richard, Cole, Javier, thank you for subscribing. Mike, and everybody. I don't know if I mentioned you or not, but yeah, thanks all. Yeah, we got 500 votes, but only 207 people gave me a thumbs up on the video. Takes a lot for me to do these videos, by the way. So hit that thumbs up. It takes you 5 seconds. It's how you sponsor today's episode. Hit that thumbs up. Let go. Got about 1,600 concurrent viewers. Okay, for anybody that's coming in here new, once again, I'm going to keep reiterating these white lines. This is one standard deviation of risk. This is what the market's pricing in. 68% of the time, we'll go tag one of these, right? We'll go in for one of these levels, okay? Remember, and we close typically within it. So that's one standard deviation. 95% of the time is 2 sigma. 2 sigmas would be about a $30 expected move, okay? So this is only one standard deviation of risk. The market loves it, and it's way better than expected. We can go 2. So what is this in terms of percentage up, percentage down? 7.4 up, about 7.5, right? Yes, I did check out the options chain. We did pull it, $13. Today, there was definitely, obviously more calls. We had nothing too crazy, but we did have quite a bit traded at the ask or above. Almost half. And then puts, nothing too crazy from a sizzle perspective. Sizzle perspective is the average of the last 5 days. So when it says 1.48, we're trading a little bit more option contracts than we were in the prior 5 trading sessions. Yeah, we had about 17 minutes, somebody mentioned. I didn't pull it up of when it actually comes out, but typically, yeah, it's around 20 minutes or so. For anybody that's new in here and likes market briefs and wants to get briefed on the market, subscribe to the channel. It's free to do so. We pull out videos there. I give good analysis on the market, give some insights that you're not going to hear from other channels. All right. You can always go, I verify my performance every year, right? I'm not just some guy here on the internet, but you can go to the United States Investing Championship website. My name is going to be there every month. For the last 3 years, it has been. I don't really compete, but I do it to be verified in front of people by a third party. Okay. I use interesting signal charts. We try to get ahead of what the next market move is going to be. So if you're very bearish, because the market's been selling, you might be hearing me say a little bit more bullish things. If the market's super bullish and you're super bullish, you might get mad because I might be saying, hey, the market can potentially calm down here. Okay? And I use tools to help me navigate that from a quantitative perspective, whether that's through the options market and or technical perspective and just various signal charts using price, volatility, you name it, volume. All right. Derek, thanks for subscribing to the channel. Terry, thanks for subbing to the channel. Nomad, Fedric. Thanks, Ivan. We're waiting here for earnings to hit. We've got about got 937 votes in here so far. So a lot of people voted. So far, it's more people are saying NVIDIA will save the market. I mean, we're going to have a bullish reaction. About 39% are saying, nope, it's going to probably be pretty bad. It doesn't really matter right now. If they told me what the NVIDIA's earnings were, which in my back head, I'm thinking like it's going to be bullish earnings. Or, no, sorry, take that word back. I think it's going to be a good earnings. I don't know what they're going to say. Like if I had that information right in front of me, I don't know what guidance is going to be. So I don't know how the market's going to respond. So yeah, still wouldn't know what to do. I don't personally trade earnings unless if I'm already in a position and it's up. Trade more from the bullish perspective. Right? And I'm not much of a short seller, but I do on occasion. All right, so you know a little bit about me. If I'm exit liquidity, I mean, I don't know. I don't even know what that means. I'm up, 40+% on the year. So I don't know how that makes sense. For sure, NECA. Appreciate you being on here too. How do I group myself as a trader? I'm primarily a swing trader, but I do occasionally do some day trades. Primarily swing trading is my focus. And you can look up my performance on the United States Investing Championship anytime you want. And then sometimes I do like the prop firm stuff. I recently had just an excellent experience with the prop firm, which is linked there. I took 5 accounts, spent $2,500 on them, and ran it up to $80,000 in payouts. Did my entire backyard. And if you want to watch how I did that, I made a video for you. And I did it during the most bearish time this year of the market because that's the conditions that work the best for that type of trade style. Hey, Hermes. Yeah, I stream. Yep, a lot of people see me on X, but mainly here is on YouTube. A lot of people do care about the performance, actually. If you don't care and you're watching people like trade on YouTube, but you don't care about the person's performance being verified, I mean, that's probably why ICT crowd is so big, is because they don't care about actually verification. I'm guessing you're an ICT trader. Boom, roasted. Can I link the video? Yeah, let me see if I can find it for you. Still waiting here on NVDA earnings. I'm Buns. I mean, sure. Yeah, whatever you want to say. I don't care. You're the guy, the one that's on the internet on the other side doing that, saying that, right? Doesn't bother me. You're here watching me. I'm winning. I'm winning. All right, let's see here. You can't hurt me, little man. Okay, yeah, here it is. Here's that video if you want to see it. That's the one that I did with the prop firm. Winning! No, I don't think anybody's mad. Can captions turn to be on so you can read? I don't even know how that works on live streams. I'd have to look into that. I don't know how to do that now. Still no real reaction over here. Coming in close to earnings. It looks like, I mean, at least on Thinkorswim it's saying this. 4 p.m. Central Time. That's the call. So, should be getting it here somewhat soon. I wasn't planning on streaming the earnings call live, but I can put it up. I don't mind that. I just might just be quiet and turn my thing off while it does that, and we can watch price action and just what they say, how it reacts, and so forth. That's fine. If the market crashes, could that also be the end of all technical analysis on YouTube? The market crashes? I don't know. I doubt it. Yeah, we'll put it up. We'll pull it up when it plays. Got about 1,400 votes saying yes, it's going to save the market. 37% still no. 1,400 votes. Polymarket saying a 92% beat is what somebody's reporting here. Let's take a look. Polymarket. Let's pull up what the Polymarket's saying. Yep, 92% beat over here on that. Pretty solidly in the 90s since that came up, came out. But even with the beat, we don't know what guidance is going to look like. I understand that. So even with the beat, we don't know if the market's going to, how the market's necessarily going to respond. So that's why I like to mark out what the market's pricing in for risk. And that's these levels here. And that's once again, one standard deviation of risk, 68%, right? Florin, thanks for subbing to the channel. Jose, thanks for subbing to the channel. Vincent, thanks for subbing to the channel as well. Krish, Jax. For those that don't know, that's new here, SPY has been down to its lower weekly implied move already today. This week. It's tagged the weekly implied move basically every single week. So if you want to know what these weekly implied moves are every week, sub to the channel. I don't know how else to tell you. I can give you a shot here of what that looks like. Still waiting on earnings. This is for this quarter. So these orange lines are the weekly implied moves. The month to date is the purple. We know these levels ahead of time. It's what the market price is in for risk. We tagged the lower weekly, lower monthly, and lower weekly. But each week, right, we've tagged it. We exceeded once, tagged it, closed at it, tagged it, reverted off of it, tagged it. I have a lot of data on here, so we track them every week. Tells us what the market's pricing in for risk. It's great stuff.
Chain ain't jewelry, son. It's a map to the place where the lost ones run. Beneath the halo, west wind blow, my mind stay low. Still keep faith where the cold don't go. Enemies pray, but they pray too late. I talk to God through a halo way. This city made me, broke me, saved me. Chrome reflections raised me crazy. Every scar's a lyric, every tear's a rhyme. Every night I breathe a borrowed time. We sing chrome prayers through the smoke.
We've been saying 6 minutes till we get that report. See how it responds. I'll pull up my NQ chart. Today we tagged our daily implied movement SPX and kind of reverted from those levels. Came back down into and around 6,600, which is a pretty big 0 DTE level. And we just kind of got chopped in the chop. Chopped in the chop. NQ, holding above its opening range for the day, closing above it. Hope for the best, prepare for the worst. Yep. How's the order book looking? Are you talking about the book map order book, or are we just talking level 2s? Or I guess both. We can pull up a book map. I can't read the numbers. Keith subscribing to the channel, Chris subscribing to the channel, Ethan subscribing to the channel, Peter, Tim, Vignesh, Wilson, thanks all for subbing to the channel. Appreciate that. Make sure to keep an eye out for these market briefs if you are active in these markets. Okay. This music station it's actually just taking popular songs and converting them to like 1950s soul. It's AI. It's just a playlist on YouTube. Got about 5 minutes here, apparently. So remember, the expected move is about up to 200 down to 172. So this is for fun. You got up to 200 right about here, 130,000 orders here for volume. And then what was the number on the downside? 172, about 172. That's just the expected move. And that's right down here, about in this range, 170, 172. Okay. We got quite a bit of volume on both sides there. And keep an eye here on just the chart and keep an eye on these expected moves. market's priced already to the downside. I mean, it's priced to the upside and downside if you're talking about the expected move of the market. It's, but then again, I don't know. These expected moves, these aren't just levels drawn out on the screen. It's going into the options chain, right, and looking at all the strikes within that within that expiration, plugging in some math, and outputting what the market is pricing as far as that expected move. An easy back of the hand math that you can do is like a, at the money straddle. All right. Thinkorswim does a pretty good job though with its expected moves, and Tasty Trade does a pretty good job for equities. Earnings is not out yet. You'll know when it's out. You'll see it. It's going to move very quickly. And to one of these levels typically is my assumption here, which is typically what happens. Imagine it comes out and it just doesn't move. What do I think about Nebius? I'd have to pull it up. I don't really know off the top of my head. I'd have to, and I don't want to leave this because we're now like nearing about 2 minutes. If it comes out, 20 minutes after, that is.
Even ghosts still talk to God sometime. Muted trumpet fades in. Lazy snare brushes kick the groove.
All right, so we had our poll. We'll close it. 63% it's going to save the market. 37% no. We had 1,600 votes. We're going to end the bowl. Here we go. Let's see if it comes on time here. Let's go. Church bell silent, my soul off beat, still I hum that hymn when I walk these streets, go still pray in the midnight rain. Quiet's gone quiet, but the pain remain. Lord don't answer, but I talk anyway. All right, here's earnings. Even the lost got dues to pay. I keep faith folded in my coat next to a flask and a suicide note. Alrighty. Here we go. Oh my God, I'm scared. All right, so far we have adjusted EPS 1.3, expected 1.24, so it did come in better than expected. Revenue 57 billion, expected 54. Better than expected so far. A little bit of a pop-up. Remember, the expected move for one standard deviation is still up here to 200, and that's good for till tomorrow. Usually it hits it right out of the gate, like pretty quickly after earnings. We'll see here. Hey, if you're bullish don't get too cocky yet, okay? You never know what these things do. These things can reverse and fall flat on their faces, okay? So far, so good. Let's be happy, but not cocky. We're waiting on some more data from NVDA here to pop up on my data feed, but so far it beat expectations. Polymarket was right with the beat, and the market is responding quite nicely so far, okay? Remember, expected move is up here at around 200. That's what the market price in for risk. Right now it's up about 4% on the after earnings, okay? In here. I'm long, so it's coming down. Oh. So far, so good, people. Let's see how NQ is kind of responding right now. Whoa, blew past my screen. Here we go. NQ up over 100 handles in a very short period of time. So I'm assuming that other names are kind of participating in that. We'll see if we can continue on. Let's go. Let's push it. Let's get there. Champagne now? Question mark. Earnings get sketchy to me, so you never know. I've seen too many times where it gets like all the way up there and then comes back down to break even or heads lower, you know? So far, the expected move is still open. We're trading within the 1 standard deviation move, okay? 68% of the time, right? But we have not tagged an expected move yet, okay?
But I think God loves the broken more. Hollow guitar strums, tambourine, shake softly.
Do, 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 do.
I seen halos hang from rearview glass. Saints and sneakers, futures in cash. Corner store choir humming low. Psalms of survival in a world so cold. I wear sin like a tailored suit. Still pray slow under dirty boots. I don't preach, I just speak the pain. Every verse
For those that might be trading this for whatever reason during earnings, right? One, it's really volatile, but one little trick here, you can always go, oops, go like NVDA. I'm gonna take a,
cross on my chain.
if you open this up like this, you can apply an earnings volume weighted average price to it. And you want to actually hold above the earnings VWAP. We're actually currently below that. Below earnings volume weighted average price.
I shine through the dirt.
What is your YouTube channel? You're on it. We do market briefs, look at the markets.
In the liquor light. Truth comes slow in the dead of night. My prayers got rhythm, my soul got scars. Still humming grace under street lamp stars. Mama said, boy, don't chase that fame. But the choir gone quiet when you scream my name.
Still holding positive so far overnight session, but it's pulling back a little bit here underneath the earnings volume weighted average price. Oh, music that you're listening to on YouTube. Oh, it's called 1 Hour of Best 1950s Soul Version. This is, it's like AI just remakes of these songs.
Cross on my chain. Still weigh a ton. Forgive me, Lord. All the things I've done.
It says EPS, earnings per share up 60% year over year, revenue up 62% year over year, earnings, EPS up 24% quarter over quarter, revenue up 22% quarter over quarter.
Ain't no clean hands when you fight to live. The world don't take it, just forgets to give.
Play the report. What do you mean play the report? The earnings call's not going on yet.
Faith in the lies I
Is it like,
told. I found
got an earnings call over here.
yeah. I said the streets got songs.
What am I missing?
Every
Let me see here.
pray before the day is gone.
It's still 30 minutes away.
Ain't no quiet
Yeah.
in the city, just 808s.
Yeah, we'll play it, but it's not ready yet.
Still groove when the bass line shakes. I talk to him through smoke and sound. He says, son, don't stop, you're heaven bound. I'm flawed, I'm real, I'm too deep to fake.
Still holding up very well. Earnings call can definitely make this a driving force. We'll see which way that it wants to take it. So far, it's reacting to the data that we have positively, right?
Cross on my chest. Still weigh a ton. Forgive me, Lord. Oh, for the things I've done. Oh, I shine through the dirt. 'Cause I came from
I mean, I'm seeing some things for guidance around sales, 65 versus 62 billion. We'll be able to get into the event here in about 15 minutes. Be a lot better if we can get above the earnings volume weighted average price. Yeah, Felipe, I don't know about the delayed data and what that's going to bring. But I do know what the market's pricing in for risk going into tomorrow's trading session. So that's what, that's where my focus is at, is what the market anticipates as far as risk. I don't want to get my narrative too loud. I'd rather prefer to see what billions upon billions of dollars is doing for risk. And if I look at SPX and we look at tomorrow's expected move, we had, by the way, it's a option expiration. We have an AM settlement 1 day away. So about $81 of expected move. So pretty big day being priced in for tomorrow. SPY, $8.85 of expectations, right? That's huge expected move for a single day. So the risk is gigantic. Qs, $11 of expected move for Qs. Crazy. Let's see how some of these other names are looking. Meta, up slightly there. Amazon, these are both names that we talked about in last night's brief. Definitely up from the levels that we mapped out yesterday. So if you were patient, looks good right now. Kind of right there at that VWAP.
I need to see you and feel you next to me. I provide everything you need, and I like your smile. I don't want to see you cry. Got some questions that I gotta ask, and I hope you can come up with the answers, babe. Girl, hey, it's easy to love me now.
Did I just jinx it by hopping in my rocket ship?
If I was down and out, would you still have love for me? Girl, it's easy to love me now. Now, would you love me if I was down and out? Would you still have love for me? If I fell off tomorrow, would you still love me? If I didn't smell so good, would you still hug me? If I got locked up and sentenced to a quarter century, could I count on you to be there to support me?
We got the earnings call in about 30 minutes. We'll play it. When it's closer, we'll get into the room.
If I was hit and I was hurt, would you be by my side? If it was time to put in work, would you be down to ride? I get out and peel a brother cap, chill and dry. I'm asking questions to find out how you feel inside. If I ain't rap cause I flip burgers at Burger King, would you be ashamed to tell your friends you're feeling me? In the bed, if I use my tongue, would you like that? If I wrote you a love letter, would you write back? Now we could have a little drink and
Covers low-key fire. It is, huh?
what you like, I know you like that. Girl,
All right. Holding above the earnings VWAP. Right now, we're kind of just trading at it. We're just chilling, hanging out. I'm not trading this. Nope. But if you are trading it, this would be one standard deviation move. Still a possibility up here. We have not tagged a daily expected move, an earnings expected move yet on NVIDIA. All right, I'll share the playlist. It's just something that I found online. It's like an hour long of these music songs, just remixed. I'll share it in the chat. There you go. That's what I've been playing. I should have Rick rolled you right there. I should have sent you one of those Rick rolls. I am not posting that from the Discord, but it is hilarious. It's pretty funny. It's pretty funny. Yes, I can tell you IWM's expected move for tomorrow. There we go. We're looking at $4.14 of expected move tomorrow for IWM. Okay? So if you go into the daily chart, you look at the close. All right, $4 up. Or whatever I said, just do that, and then $4 down. Okay, I'm not going to draw it out right now. I'll post it in the Discord after. What was I doing? Oh yeah, NVIDIA. All right. Let's go, baby.
Is suddenly missing. Luckily, you have Google Fi Wireless.
No, yeah, I'll stream the webcast. I'm gonna put it on, and I'll probably just mute myself and be quiet, and we can just listen to it. If I have commentary, okay, cool. Oh, oops, no, I don't want to play. Can't have that play. Fade it. Mike, thanks for subbing to the channel. Zaina, thanks for subbing. Tyler, thank you for subbing. Elijah, Brian, Fun, Stealth, thank you all for subbing to the channel. Sal, thank you for subbing. We can go into the room 15 minutes before, so basically in 10 minutes we can get in the room, but it doesn't start till 2 o'clock Pacific Standard Time. 4 Central, 5 Eastern. Q's expected move, I can give you that too. $11 of expected move for Q's. By the way, you know what the expected move was for the Q's today? You want to know? All right, this was yesterday's expected moves. Let me bring it to you. Okay, so this was the expected moves that we sent out yesterday, obviously. Q's, $9.45. So the upper level was 605.76. 605.76. Right there. Off the morning drive. Isn't that wild? That's crazy. That thing just went VIX expiration us into our expected move. Which, by the way, $9.45 of expected move is huge for a day in the Qs. I know if you're new here and you don't grasp that, it's like, what? What is he talking about? Stick around, sub to the channel, and follow the expected moves when I post them. They're hugely important because it's not me just drawing out levels, right? I'm not just some brainiac saying this magic level here. It's what the options market is depicting as forward-looking risk, right? And you think of it in terms of probabilities, right? 68%, 1 standard deviation, 95%. Okay. This was the weekly implied move for SPY. This was the monthly implied move, right there. Actually, I have it a range because I do 2 different mathematics. This was the eyeball range, the one that I manually do. Came in there on November 7th. And this was the SPX one. Or sorry, the SPY from the options chain. Take a look here. These are the monthly implied moves for the Qs. We knew these levels obviously before the month started, and we say, okay, our risk to the upside, risk to the downside. And where are we? We're right here. The last couple of months we traded right up to them. So it made sense to see some sort of a consolidation or pullback at a point. All right, let's go back to NVIDIA. What are we doing here? Almost can get into the room. Okay. Okay, dokie. NVIDIA.
I don't know what they say about me, but a queen can't get a dime for free.
Zach, thanks for subscribing. Mike.
No cat and no change, you just see that I'm living by the boss code.
Zooming out of Qs, we're still in a downtrend. Wait, what do you mean zooming out? If I zoom out of the Qs, we're not in a downtrend. What do you mean? If I zoom out like a weekly time frame, this doesn't look like much of a downtrend. Maybe like, are you just saying like right here, the lower high, lower low right here? Maybe just right here? Maybe shorter term?
She feeling me deep. I move like money in my sleep. From Harlem to the Bay, they know my talk. Pinstripe suit when I hit that walk. No tricks, no games, just paper and peace. Real ones eat when the fakes release. I don't know what they say about me, but a queen can't get a dime.
If I had to make a choice, Zeal, I mean, I'm positioned for an all-time high, right? Like I'm positioned for it to not go to all-time highs, but I'm also positioned for it to go to all-time highs. You know, you can tell a lot about position sizing. So I want to be a part of it if it does, and I don't want to blow up completely if I'm wrong. This is Thinkorswim platform for those that ask. Expected move for Qs tomorrow is $11. So whatever the close was today, add 11 to it. That's going to give you your expected move high, minus $11 to it. That's going to give you your expected low, move low, 1 standard deviation, right? 1 standard deviation. Do I think it does? I mean, my positioning for my portfolio suggests it does. It's not like I'm shorting this market. So I'm positioned for it to go higher. But the confidence level is not, I can't do 100% confidence. If I was 100% confident that it was going to happen, I'd be betting bigger. But this market, you have to deal with uncertainty. And if you don't deal good with uncertainty, you're going to have a hard time trading. Yeah, Eric, those are all good points. But we got to just follow price. Price will be the determining factor on how it expects that. Maybe that comes into effect later. Maybe it comes into effect now. I mean, remember, so we've been talking about the market kind of turning and potentially getting more volatile for a while now, at least if you've been watching the market briefs. All right. So if I, and by the way, there's all kinds of catalysts around the corner too. Mainly so around the tariff implementation, right? Because we have the Supreme Court. We had the argumentative thing go through on November 5th, but we don't have a resolution yet, and that could be a market moving event. You made the nice list, right? This is what I'm highlighting here. But you know, we started talking about the market potentially changing in terms of volatility go over here. Went up a little bit higher on some news. Volatile. Went up. Volatile. All right.
But those routes sure are. Maybe next year, Mr. Green. Again? For everyone on your nice list.
Ads. All right, we got about 20 minutes left till the earnings call. Put it on here shortly. Price action so far is just kind of consolidating here. Probably right around the earnings VWAP, if I'm not mistaken. Yeah, we're holding right at that. What convinced me to bet up? I mean, I didn't place any bets here on NVIDIA, so I didn't bet. I just, my assumption was that it was going to go up. That's all. And I don't know what it's going to end like. I don't know what this call is going to bring, right? Another reason why I thought maybe it might go up is simply just because a lot of the signal charts that I was looking at and I shared on last night's brief suggested like, dude, this could be one of those market shakeout events. And then all of a sudden we come in and we say this market, right? We are already down for lower weekly implied move, right? And to break from these levels could be devastating to the market, to volume, to everything, right? Especially being a negative gamma, you can get wild moves when market conditions change. So with all this taken in fact, and then we looked at back month versus front month volatility being under 1.0, felt like it was going to be, you know, one, think that they're going to report positively, but two, thought the market would see a decent reaction. All speculative, all narrative, right? I can't trade based off of that narrative. And if I do trade, it has to be very, very small. Hey, Eric, thanks for subbing to the channel. Sam, thanks for subbing to the channel too. Jones, Darren, thank you for the super chat. Jones, with the $10 super chat. Jones, I don't know if you saw this, by the way, but didn't you give me super chats the other prior trading session too? And I just didn't see them. I didn't see the alert. And I posted it out on YouTube to make sure that you were tagged. Thank you so much for the prior one. I think you're the same person if I remember correctly. And thank you again for the super chat. You don't need to do that. You spend that just to be in the Discord, right? You might be in the Discord. Thank you so much. All right, we got one more minute. We can enter into the group, the NVIDIA thing, the call, and then it's about 15 minutes out. Okay, cool, Jones. I'm happy you saw it. Thank you again. Hey, Coco's giving a bad omen right now. We're supposed to be in a rocket ship having fun, Coco. Get over here. Good job. All right, let's hop in this room.
Got brass in my band, bourbon in my glass. Talk that slow fire.
Send me a DM on the stream on Discord. Okay, I rarely do the Discord DMs, but I'll try to look for it.
Still stay cool.
I typically respond only to like the Patreon messages, private messages in Patreon. But I'll take.
Crowd lean in when the groove away. Every hour watch I drift and play. Words hit soft, but they
All right, y'all, we're gonna get this set up. I'm gonna take a little break while we're loading this. Where's the volume button? Let's see how loud this is again, because I can't tell. Medium, medium. Hey Spence, yeah, have a good time on your walk. Yeah, I feel like the same thing. I want to go on a walk. Yeah, we do have economic reports coming. That could always temper the NVIDIA beat, absolutely. Or can amplify it. Why is CrowdWeave going higher than NVIDIA? I mean, that thing is probably because it's sold off so hard. Did that report earnings? I don't know. I haven't checked. Let me go to my tiny cam here. Ah. Focus in on the top portion. My risk reward ratio. I mean, it just depends. It's not always the same, right? I'd love to look for setups that offer up, 3+ reward to risk, but it's not like the average holds that. Seeing just some higher lows here so far on the price action. Just digesting into the earnings call, which is taking place here in the next 10 minutes. Okay. Some people saying not looking good, get to the expected. Yeah, I'd imagine. I mean, I think that we're going to go to the expected, whether that's on this call, after the call, or tomorrow. There's a high probability, right? You're looking at options chains, looking at this strike, and you're having them from the lower portion, from the upper portion, and so forth, driving price at these levels. The MicroStrategy setup, I talked about this on last night's brief. I got out about 80%, and now I'm looking for the resetup of it, which almost came today, but I kind of missed it. So some people may have traded it. We'll look at it really quick because I want to see where it ended. Yeah, so it did come down into the level that I wanted. I wanted it to be a little bit faster and down. So on live stream, we talked about when it came down here, and we saw a nice bounce from it. But I was looking to try to get even lower, so I didn't do a refade on this one. Yesterday it played out just incredibly well. That was a great fade. Got out of the full-on bulk of the dang thing. Came back down in today, set up, but I didn't execute. So. Oh, it is what it is. It's a risk and reward ratio I follow. I think I answered that question already. I'm not too sure what you mean by what I follow. Look, my goal as a swing trader is to make the most amount of money in the shortest period of time with the least amount of risk. So I look for things that are getting incredibly tight, and I approach it like that. Like, for example, like my grab trade, GRAB. I mean, you want to see how tight that thing got and just how crazy of a risk to reward it was? Look at grab. It was right over here. Look how tight this risk is. And it fired off like crazy. Like, what's the risk to reward for like a move like this? Right? I don't really know what I'm targeting for, 2-to-1, 3-to-1, or whatever. I don't like targets that much. Right? I'll trim some off and then I'll let some runners go. But if it comes in and stops out, I'm out. Right? That's a good example of just something that exploded higher. ARQT was another one that I traded just recently. Look at risk, reward. HXL is a more recent one. Let's see how that finished today. Down slightly, but here was the entry. Bam. Risk, reward. That was a 1-for-1. All right. Go back over to NVDA. NVIDIA. Just setting up, coiling up for a move right now. It's gonna fly. I don't know which direction though. Yes, you are correct, Med. It's about $14 of expected move. So we have up here to and around 200. Right here is the upper. That's what we're eyeing in on right now. It's obviously the door can open back up down, right? We don't know. The market's response so far is positive. Right? We don't. So I'm telling the people that are bullish, don't get overly too cocky, right? We don't know. But so far, it's a good reaction. Where did my earnings thing go? There it is. Got 7 minutes till the call. 7 minutes to the call. Any potential for Google and up plays on Google? I mean, Google has been very, very strong. So I feel like we need to see that digest a little bit, right? After its massive move. But on yesterday's video, if you want to watch it, I mean, I talked about a setup within, Meta and Amazon. And I kind of walked through my thought process there for how I think about position sizing and then how I thought about approaching risk like that, because it's obviously been selling off. Yeah, Any other names kind of going off here? We got 4 minutes. Somebody had mentioned Palantir, getting a nice reaction. Somebody mentioned CoreWeave. Yeah, CoreWeave's flying high. Whatever. Oh, look at this. CoreWeave came into its monthly implied move. I think that was its 2 standard deviation move. I don't have a position, but man, that was a nice reaction from there. For those that don't know, these alerts, right? I get notified in the Discord. If you want to check out the Discord, it's not an arm and a leg. It's $16 for a month, but I have all kinds of benefits in there, including my new Asherbot that I built, which gives you the ability to look up expected moves for daily, weekly, monthly, and it also gives alerts for when any of them are tagged, but the alerts are only focused in on any equity that has weekly option expirations. So typically more liquid options, right? So for example, like just out the top of my head, all right, MicroStrategy, we got an alert as soon as it hit its 2 standard deviation expected move. I like the 2 standard deviation moves. Bam, right? And then down here at monthly, right, we get, even over here, this was one of the Asher alert monthlies. This was, I believe, expected move monthly from the options market. What other ones hit today? Let's see where Tiger finished. Tiger was one that I remember that hit. I feel like that would finish lower, but yeah, so Tiger, this was the 2 standard deviation alert here. Came back up to it, came to and around it. ADM was a big break. ADM, Archer Daniels. That was 58.73. So 58.73. Closed underneath the 2 standard deviation move, but man, we had a big break. Try to come all the way back up to that level. Circle hit a 2 standard deviation move today, CRCL. We got about 4 minutes left, by the way. I think that was down here. I didn't trade it, 68.40. Yeah, so right here was a 2 standard deviation move for Circle. Got notified there. It's looking for outside of what the market expected, and I like to get notified on those because sometimes you can look for trends and play trend breaks. Intraday, maybe turn them into a swing trade if it makes sense, right? Sometimes after massive selling like this, if you're trying to buy the dip, you look for these massive like breaks of expected move. Let's go back to NVIDIA. All right, here we go. And we're off. Oh, sorry, 3 minutes. It fooled me. The music fooled me. All right, this is going to be popping up. We'll be listening to it. I'll crank the volume up. I'm going to mute my mic and mute my screen here. I'll be around, but I'm going to take a quick break, get some more water, let my dog out, and so forth. All right. BRB. It will be RB. I did get the pool. I did. Yeah, I built it. I actually shared some videos of it on Twitter, I think, or on X or whatever. All right, I'll be back. You take care as well. I'll be back. Do I look at stocks requested by video? Yeah, by viewers. Absolutely, man. I was doing that legitimately all day today, all day. All right. No, I'm leaving. I'll be right back.
opportunity. Another growth
Not too sure
pillar
why mine
is
wasn't
the
loading.
ongoing
There,
increase
we got
in
it.
compute spend driven by foundation model builders such as Anthropic, Mistral, OpenAI, Reflection, Safe Superintelligence, Thinking Machines Lab, and xAI, all scaling compute aggressively to scale intelligence. The three scaling laws, pre-training, post-training, and inference, remain intact. In fact, we see a positive virtuous cycle emerging whereby the three scaling laws and access to compute are generating better intelligence and in turn increasing adoption and profits. OpenAI recently shared that their weekly user base has grown to 800 million. Enterprise customers has increased to 1 million, and that their gross margins were healthy. Well, Anthropic recently reported that its annualized run rate revenue has reached 7 billion as of last month, up from 1 billion at the start of the year. We are also witnessing a proliferation of agentic AI across various industries and tasks. Companies such as Cursor, Anthropic, Open Evidence, Epic, and Abridge are experiencing a surge in user growth as they supercharge the existing workforce, delivering unquestionable ROI for coders and healthcare professionals. The world's most important enterprise software platforms like ServiceNow, CrowdStrike, and SAP are integrating NVIDIA's accelerated computing and AI stack. Our new partner, Palantir, is supercharging the incredibly popular ontology platform with NVIDIA CUDA-X libraries and AI models for the first time. Previously, like most enterprise software platforms, ontology runs only on CPUs. Lowe's is leveraging the platform to build supply chain agility, reducing costs and improving customer satisfaction. Enterprises broadly are leveraging AI to boost productivity, increase efficiency, and reduce cost. RBC is leveraging agentic AI to drive significant analyst productivity, slashing report generation time from hours to minutes. AI and digital twins are helping Unilever accelerate content creation by 2x
Turn
and
it up a
cut
little bit more.
costs by 50%. And Salesforce's engineering team
About
has
$4
seen at
from
least
the upper daily
30%
implied move.
productivity increase in new code development after adopting Cursor. This past quarter, we announced AI factory and infrastructure projects amounting to an aggregate of 5 million GPUs. This demand spans every market: CSPs, sovereigns, model builders, enterprises, and
Welcome.
supercomputing centers, and includes multiple landmark buildouts. xAI's Colossus 2, the world's first gigawatt-scale data center. Lilly's AI factory for drug discovery, the pharmaceutical industry's most powerful data center.
Yes, I have a Patreon.
And just today,
That includes a Discord.
AWS and Humane expanded their partnership, including the deployment of up to 150,000 AI accelerators, including our GB300. xAI and Humane also announced a partnership in which the two will jointly develop a network of world-class GPU data centers anchored by the flagship 500 megawatt facility. Blackwell gained further momentum in Q3 as GB300 crossed over GB200 and contributed roughly 2/3 of the total Blackwell revenue. The transition to GB300 has been seamless, with production shipments to the major cloud service providers, hyperscalers, and GPU clouds, and is already driving their growth. The Hopper platform, in its 13th quarter since inception, recorded approximately $2 billion in revenue in Q3. H20 sales were approximately $50 million. Sizable purchase orders never materialized in the quarter due to geopolitical issues and the increasingly competitive market in China. While we were disappointed in the current state, that prevents us from shipping more competitive data center compute products to China, we are committed to continued engagement with the US and China governments, and will continue to advocate for America's ability to compete around the world. To establish a sustainable leadership position in AI computing, America must win the support of every developer and be the platform of choice for every commercial business, including those in China. The Rubin platform is on track to ramp in the second half of 2026. Powered by 7 chips, the Vera Rubin platform will once again deliver an X-factor improvement in performance relative to Blackwell. We have received silicon back from our supply chain partners and are happy to report that NVIDIA teams across the world are executing the bring up beautifully. Rubin is our 3rd generation rack scale system, substantially redefined the manufacturability while remaining compatible with Grace Blackwell. Our supply chain, data center ecosystem, and cloud partners have now mastered the build to installation process of NVIDIA's rack architecture. Our ecosystem will be ready for a fast Rubin ramp. Our annual X-factor performance leap increases performance per dollar while driving down computing costs for our customers. The long useful life of NVIDIA's CUDA GPUs is a significant TCO advantage over accelerators. CUDA's compatibility and our massive installed base extend the life of NVIDIA systems well beyond their original estimated useful life. For more than 2 decades, we have optimized the CUDA ecosystem, improving existing workloads, accelerating new ones, and increasing throughput with every software release. Most accelerators without CUDA and NVIDIA's time-tested and versatile architecture became obsolete within a few years as model technologies evolve. Thanks to CUDA, the A100 GPUs we shipped 6 years ago are still running at full utilization today, powered by vastly improved software stack. We have evolved over the past 25 years from a gaming GPU company to now an AI data center infrastructure company. Our ability to innovate across the CPU, the GPU, networking, and software, and ultimately drive down cost per token is unmatched across the industry. Our networking business, purpose-built for AI, and now the largest in the world, generated revenue of $8.2 billion, up 162% year over year, with NVLink, InfiniBand, and Spectrum-X Ethernet all contributing to growth. We are winning in data center networking as the majority of AI deployments now include our switches with Ethernet GPU attach rates roughly on par with InfiniBand. Meta, Microsoft, Oracle, and xAI are building gigawatt AI factories with Spectrum-X Ethernet switches, and each will run its operating system of choice, highlighting the flexibility and openness of our platform. We recently introduced Spectrum XGS, a scale-across technology that enables gigascale AI factories. NVIDIA is the only company with AI scale-up, scale-out, and scale-across platforms, reinforcing our unique position in the market as the AI infrastructure provider. Customer interest in NVLink Fusion continues to grow. We announced a strategic collaboration with Fujitsu in October, where we will integrate Fujitsu's CPUs and NVIDIA GPUs via NVLink Fusion, connecting our large ecosystems. We also announced a collaboration with Intel to develop multiple generations of custom data center and PC products, connecting NVIDIA and Intel's ecosystems using NVLink. This week at Supercomputing 25, ARM announced that it will be integrating NVLink IP for customers to build CPU SoCs that connect with NVIDIA. Currently on its 5th generation, NVLink is the only proven scale-up technology available on the market today. In the latest MLPerf training results, Blackwell Ultra delivered 5x faster time to train than Hopper. NVIDIA swept every benchmark. Notably, NVIDIA is the only training platform to leverage FP4 while meeting the MLPerf's strict accuracy standards. In semi-analysis inference max benchmark, Blackwell achieved the highest performance and lowest total cost of ownership across every model and use case. Particularly important is Blackwell's NVLink's performance on a mixture of experts, the architecture for the world's most popular reasoning models. On DeepSeek R1, Blackwell delivered 10x higher performance per watt and 10x lower cost per token versus H200, a huge generational leap fueled by our extreme co-design approach. NVIDIA Dynamo, an open source, low latency modular inference framework, has now been adopted by every major cloud service provider. Leveraging Dynamo's enablement and disaggregated inference, the resulting increase in performance of complex AI models such as MOE models, AWS, Google Cloud, Microsoft Azure, and OCI have boosted AI inference performance for enterprise cloud customers. We are working on a strategic partnership with OpenAI, focused on helping them build and deploy at least 10 gigawatts of AI data centers. In addition, we have the opportunity to invest in the company. We serve OpenAI through their cloud partners, Microsoft Azure, OCI, and CoreWeave. We will continue to do so for the foreseeable future. As they continue to scale, we are delighted to support the company to add self-build infrastructure, and we are working toward a definitive agreement and are excited to support OpenAI's growth. Yesterday, we celebrated an announcement with Anthropic. For the first time, Anthropic is adopting NVIDIA, and we are establishing a deep technology partnership to support Anthropic's fast growth. We will collaborate to optimize Anthropic models for CUDA and deliver the best possible performance, efficiency, and TCO. We will also optimize future NVIDIA architectures for Anthropic workloads. Anthropic's compute commitment is initially including up to 1 gigawatt of compute capacity with Grace Blackwell and Vera Rubin systems. Our strategic investments in Anthropic, Mistral, OpenAI, Reflection, Thinking Machines, and other represent partnerships that grow the NVIDIA CUDA AI ecosystem and enable every model to run optimally on NVIDIA's everywhere. We will continue to invest strategically while preserving our disciplined approach to cash flow management. Physical AI is already a multi-billion-dollar business addressing a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. Leading US manufacturers and robotics innovators are leveraging NVIDIA's 3-computer architecture to train on NVIDIA, test on Omniverse computer, and deploy real-world AI on Jetson robotic computers. PTC and Siemens introduced new services that bring Omniverse-powered digital twin workflows to their extensive installed base of customers. Companies including Belden, Caterpillar, Foxconn, Lucid Motors, Toyota, TSMC, and Wistron are building Omniverse digital twin factories to accelerate AI-driven manufacturing and automation. Agility Robotics, Amazon Robotics, Figure, and Skilled at AI are building our platform, tapping offerings such as NVIDIA Cosmos World Foundation models for development, Omniverse for simulation and validation, and Jetson to power next-generation intelligent robots. We remain focused on building resiliency and redundancy in our global supply chain. Last month, in partnership with TSMC, we celebrated the first Blackwell wafer produced on US soil. We will continue to work with Foxconn, Wistron, Amcor, Spill, and others to grow our presence in the US over the next 4 years. Gaming revenue was $4.3 billion, up 30% year on year, driven by strong demand as Blackwell momentum continued. End market sell-through remains robust, and channel inventories are at normal levels heading into the holiday season. Steam recently broke its concurrent user record with 42 million gamers, while thousands of fans packed the GeForce Gamer Festival in South Korea to celebrate 25 years of GeForce. NVIDIA Pro Visualization has evolved into computers for engineers and developers, whether for graphics or for AI. Professional visualization revenue was $760 million, up 56% year over year, was another record. Growth was driven by DGX Spark, the world's smallest AI supercomputer, built on a small configuration of Grace Blackwell. Automotive revenue was $592 million, up 32% year over year, primarily driven by self-driving solutions. We are partnering with Uber to scale the world's largest Level 4 ready autonomous fleet, built on the new NVIDIA Hyperion L4 robotaxi reference architecture. Moving to the rest of the P&L, GAAP gross margins were 73.4%, and non-GAAP gross margins was 73.6%, exceeding our outlook. Gross margins increased sequentially due to our data center mix, improved cycle time, and cost structure. GAAP operating expenses were up 8% sequentially and up 11% on non-GAAP basis. The growth was driven by infrastructure compute, as well as higher compensation and benefits and engineering development costs. Non-GAAP effective tax rate for the third quarter was just over 17%, higher than our guidance of 16.5% due to the strong US revenue. On our balance sheet, inventory grew 32% quarter over quarter, while supply commitments increased 63% sequentially. We are preparing for significant growth ahead and feel good about our ability to execute against our opportunity set. Okay, let me turn to the outlook for the fourth quarter. Total revenue is expected to be $65 billion, plus or minus 2%. At the midpoint, our outlook implies 14% sequential growth, driven by continued momentum in the Blackwell architecture. Consistent with last quarter, we are not assuming any data center compute revenue from China. GAAP and non-GAAP gross margins are expected to be 74.8% and 75% respectively, plus or minus 50 basis points. Looking ahead to fiscal year 2027, input costs are on the rise, but we are working to hold gross margins in the mid-70s. GAAP and non-GAAP operating expenses are expected to be approximately $6.7 billion and $5 billion respectively. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $500 million, excluding gains and losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. At this time, let me turn the call over to Jensen for him to say a few words.
Thanks, Colette. There's been a lot of talk about an AI bubble. From our vantage point, we see something very different. As a reminder, NVIDIA is unlike any other accelerator. We excel at every phase of AI, from pre-training and post-training to inference. And with our 2-decade investment in CUDA-X acceleration libraries, we are also exceptional at science and engineering simulations, computer graphics, structured data processing, to classical machine learning. The world is going is undergoing three massive platform shifts at once. The first time since the dawn of Moore's Law. NVIDIA is uniquely addressing each of the three transformations. The first transition is from CPU general purpose computing to GPU accelerated computing, as Moore's Law slows. The world has a massive investment in non-AI software, from data processing to science and engineering simulations, representing hundreds of billions of dollars in cloud computing spend each year. Many of these applications, which ran once exclusively on CPUs, are now rapidly shifting to CUDA GPUs. Accelerated computing has reached a tipping point. Secondly, AI is also reached a tipping point and is transforming existing applications while enabling entirely new ones. For existing applications, generative AI is replacing classical machine learning in search ranking, recommender systems, ad targeting, click-through prediction to content moderation, the very foundations of hyperscale infrastructure. Meta's GEM, a foundation model for ad recommendations trained on large-scale GPU clusters, exemplifies this shift. In Q2, Meta reported over a 5% increase in ad conversions on Instagram and 3% gain on Facebook feed, driven by generative AI-based GEM. Transitioning to generative AI represents substantial revenue gains for hyperscalers. Now a new wave is rising. Agentic AI systems, capable of reasoning, planning, and using tools. From coding assistants like Cursor and Quad Code to radiology tools like iDoc, legal assistants like Harvey, and AI chauffeurs like Tesla FSD and Waymo. These systems mark the next frontier of computing. The fastest growing companies in the world today, OpenAI, Anthropic, xAI, Google, Cursor, Lovable, Replit, Cognition AI, OpenEvidence, Abridged, Tesla, are pioneering agentic AI. So there are three massive platform shifts. The transition to accelerated computing is foundational and necessary, essential in a post-Moore's Law era. The transition to generative AI is transformational and necessary, supercharging existing applications and business models. And the transition to agentic and physical AI will be revolutionary, giving rise to new applications, companies, products, and services. As you consider infrastructure investments, consider these three fundamental dynamics. Each will contribute to infrastructure growth in the coming years. NVIDIA is chosen because our singular architecture enables all three transitions, and thus so for any form and modality of AI, across all industries, across every phase of AI, across all of the diverse computing needs in a cloud, and also from cloud to enterprise to robots. One architecture. Toshiya, back to you.
We will now open the call for questions. Operator, would you please poll for questions?
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to one question. Thank you. Your first question comes from Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you. I wonder if you could update us. You talked about the $500 billion of revenue for Blackwell plus Rubin in 25 and 26 at GTC. At that time, you had talked about $150 billion of that already having been shipped. So as the quarter's wrapped up, are those still kind of the general parameters that there's $350 billion in the next kind of, 14 months or so. And, I would assume over that time, you haven't seen all the demand that there is. There's any possibility of upside to those numbers as we move forward.
Yeah, thanks, Joe. I'll start first with a response here on that. Yes, that's correct. We are working into our 500 billion forecast, and we are on track for that as we have finished some of the quarters, and now we have several quarters now in front of us to take us through the end of calendar year 26. The number will grow, and we will achieve, I'm sure, additional needs for compute that will be shippable by fiscal year 26. So we shipped 50 billion this quarter, but we would be not finished if we didn't say that we'll probably be taking more orders. For example, just even today, our announcements with KSA, and that agreement in itself is 400 to 600,000 more GPUs over 3 years. Anthropic is also net new. So there's definitely an opportunity for us to have more on top of the 500 billion that we announced.
The next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There's clearly a great deal of consternation around the magnitude of AI infrastructure build-outs and the ability to fund such plans and the ROI. Yet, at the same time, you're talking about being sold out. Every stood-up GP is taken. The AI world hasn't seen the enormous benefit yet, from B300, never mind Rubin, and Gemini 3 just announced Grok 5 coming soon. And so the question is this: when you look at that as the backdrop, do you see a realistic path for supply to catch up with demand over the next 12 to 18 months, or do you think it can extend beyond that time frame?
Well, as you know, we've done a really good job planning our supply chain. NVIDIA's supply chain basically includes every technology company in the world. And TSMC and their packaging and our memory vendors and memory partners and all of our system ODMs have done a really good job planning with us. And we were planning for a big year. We've seen for some time the three transitions that I spoke about just a second ago: accelerated computing from general purpose computing. And it's really important to recognize that AI is not just agentic AI, but generative AI is transforming the way that hyperscalers did the work that they used to do on CPUs. Generative AI made it possible for them to move search and recommender systems and, add recommendations and targeting. All of that has been moved to generative AI, and it's still transitioning. And so whether you installed NVIDIA GPUs for data processing, or you did it for generative AI for your recommender system, or you're building it for agentic chatbots and the type of AIs that most people see when they think about AI, all of those applications are accelerated by NVIDIA. And so when you look at the totality of the spend, it's really important to think about each one of those layers. They're all growing. They're related, but not the same. But the wonderful thing is that they all run on NVIDIA GPUs. Simultaneously, because the quality of the AI models are improving so incredibly, the adoption of it in the different use cases, whether it's in code assistance, which NVIDIA uses fairly exhaustively, and we're not the only one. I mean, the fastest growing application in history, combination of Cursor and Claude Code and OpenAI's Codex and GitHub Copilot. These applications are the fastest growing in history. And it's not just used for software engineers. It's used because of vibe coding, it's used by engineers and marketeers all over companies, supply chain planners all over companies. And so I think that that's just one example, and the list goes on, whether it's open evidence and the work that they do in healthcare, or the work that's being done in digital video editing, Runway. And I mean, the number of really, really exciting startups that are taking advantage of generative AI and agentic AI is growing quite rapidly. And not to mention, we're all using it a lot more. And so all of these exponentials Not to mention, just today I was reading a text from Demis, and he was saying that pre-training and post-training are fully intact. And Gemini 3 takes advantage of the scaling laws and received a huge jump in quality performance, model performance. And so we're seeing all of these exponentials kind of running at the same time. And just always go back to first principles and think about what's happening from each one of the dynamics that I mentioned before. General purpose computing to accelerated computing, generative AI replacing classical machine learning, and of course, agentic AI, which is a brand new category.
The next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. I'm curious, what assumptions are you making on NVIDIA content per gigawatt in that 500 billion number? Because we have heard numbers as low as 25 billion per gigawatt of content to as high as 30 or 40 billion per gigawatt. So I'm curious what power and what dollar per gigawatt assumptions you are making as part of that 500 billion number. And then longer term, Jensen, the 3 to 4 trillion in data center by 2030 was mentioned. How much of that do you think will require vendor financing, and how much of that can be supported by cash flows of your large customers or governments or enterprises? Thank you.
In each generation, from Ampere to Hopper, from Hopper to Blackwell, Blackwell to Rubin, a part of the data center increases, and Hopper generation was probably something along the lines of 20 some odd, 20 to 25. Blackwell generation, Grace Blackwell particularly, is probably 30 to 30, say 30 plus or minus, and then Rubin is probably higher than that. And in each one of these generations, the speed up is X factors, and therefore their TCO, the customer TCO, improves by X factors. And the most important thing is, in the end, you still only have 1 gigawatt of power. 1 gigawatt data centers, 1 gigawatt power, and therefore performance per watt, the efficiency of your architecture, is incredibly important. And the efficiency of your architecture can't be brute forced. There is no brute forcing about it. That 1 gigawatt translates directly, your performance per watt translates directly, absolutely directly to your revenues, which is the reason why choosing the right architecture matters so much now. The world doesn't have an excess of anything to squander. And so we have to be really, really, we use this concept called co-design across our entire stack, across the frameworks and models, across the entire data center, even power and cooling optimized across the entire supply chain in our ecosystem. And so each generation, our economic contribution will be greater, our value delivered will be greater, but the most important thing is our energy efficiency per watt is going to be extraordinary every single generation. With respect to growing continuing to grow, our customers' financing is up to them. We see the opportunity to grow for quite some time. And remember, today, most of the focus has been on the hyperscalers. And one of the areas that is really misunderstood about the hyperscalers is that the investment on NVIDIA GPUs not only improves their scale, speed, and cost from general purpose computing. That's number one, because Moore's law scaling has really slowed. Moore's law is about driving costs down. It's about deflationary cost, the incredible deflationary cost of computing over time, but that has slowed. Therefore, a new approach is necessary for them to keep driving the cost down. Going to NVIDIA GPU computing is really the best way to do so. The second is revenue boosting in their current business models. Recommender systems drive the world's hyperscalers. Every single, whether it's watching short form videos or recommending books or recommending the next item in your basket, to recommending ads, to recommending news, it's all about recommenders. The internet has trillions of pieces of content. How could they possibly figure out what to put in front of you in your little tiny screen unless they have really sophisticated recommender systems to do so? Well, that has gone generative AI. So the first two things that I just said, hundreds of billions of dollars of CapEx is going to have to be invested, is fully cash flow funded. What is above it, therefore, is agentic AI. This is revenue, is net new consumption, but it's also net new applications. And some of the applications I mentioned before, but these new applications are also the fastest growing applications in history. Okay, so I think that you're going to see that once people start to appreciate what is actually happening under the water, if you will, from the simplistic view of what's happening to CapEx investment, recognizing there's these three dynamics. And then lastly, remember, we were just talking about the American CSPs. Each country will fund their own infrastructure. And you have multiple countries, you have multiple industries. Most of the world's industries haven't really engaged agentic AI yet, and they're about to. All the names of companies that we're working with, whether it's autonomous vehicle companies or digital twins for physical AI for factories, and the number of factories and warehouses being built around the world, just the number of digital biology startups that are being funded so that we could accelerate drug discovery. All of those different industries are now getting engaged, and they're going to do their own fundraising. And so don't just look at the hyperscalers as a way to build out for the future. You got to look at the world. You got to look at all the different industries, and enterprise computing is going to fund their own industry.
The next question comes from Ben Reitzes with Melius. Your line is open.
Hey, thanks a lot. Jensen, I wanted to ask you about cash. Speaking of $500 billion, you may generate about $500 billion in free cash flow over the next couple of years. What are your plans for that cash? How much goes to buyback versus investing in the ecosystem? And how do you look at investing in the ecosystem? I think there's just a lot of confusion out there about how these deals work and your criteria for doing those, like the Anthropic, the OpenAIs, et cetera. Thanks a lot.
Yeah, appreciate the question. Of course, using cash to fund our growth. No company has ever grown at the scale that we're talking about and have the connection and the depth and the breadth of supply chain that NVIDIA has. The reason why our entire customer base can rely on us is because we've secured a really resilient supply chain, and we have the balance sheet to support them. When we make purchases, our suppliers can take it to the bank. When we make forecasts and we plan with them, they take us seriously because of our balance sheet. We're not making up the offtake. We know what our offtake is, and because they've been planning with us for so many years, our reputation and our credibility is incredible. And so it takes really strong balance sheet to do that, to support the level of growth and the rate of growth and the magnitude associated with that. So that's number one. The second thing, of course, we're going to continue to do stock buybacks. We're going to continue to do that. But with respect to the investments, this is really, really important work that we do.
See you later.
All of the investments that we've done so far, all the way, period, is associated with expanding the reach of CUDA, expanding the ecosystem. If you look at the work the investments that we did with OpenAI, it's, of course, that relationship we've had since 2016. I delivered the first AI supercomputer ever made to OpenAI. And so we've had a close and wonderful relationship with OpenAI since then. And everything that OpenAI does runs on NVIDIA today. So all the clouds that they deploy in, whether it's training and inference, runs NVIDIA, and we love working with them. The partnership that we have with them is one so that we could work even deeper from a technical perspective so that we could support their accelerated growth. This is a company that's growing incredibly fast. And don't just look at what is said in the press. Look at all the ecosystem partners and all the developers that are connected to OpenAI. And they're all driving consumption of it. And the quality of the AI that's being produced, huge step up since a year ago. And so the quality of response is extraordinary. So we invest in OpenAI for a deep partnership in co-development to expand our ecosystem and to support their growth. And of course, rather than giving up a share of our company, we get a share of their company. And we invested in them in one of the most consequential once-in-a-generation company that we have a share of. And so I fully expect that investment to translate to extraordinary returns. Now, in the case of Anthropic, this is the first time that Anthropic will be on NVIDIA's architecture. The first time Anthropic will be on NVIDIA's architecture is the second most successful AI in the world in terms of total number of users. But in enterprise, they're doing incredibly well. Claude Code is doing incredibly well. Claude is doing incredibly well all over the world's enterprise. And now we have the opportunity to have a deep partnership with them and bringing Claude onto the NVIDIA platform. And so what do we have now? NVIDIA's architecture, taking a step back, NVIDIA's architecture, NVIDIA's platform is the singular platform in the world that runs every AI model. We run OpenAI, we run Anthropic, we run xAI. Because of our deep partnership with Elon and xAI, we were able to bring that opportunity to Saudi Arabia, to the KSA, so that Humane could also be a hosting opportunity for xAI. We run xAI, we run Gemini, we run thinking machines. Let's see, what else do we run? We run them all. And so not to mention, we run the science models, the biology models, DNA models, gene models, chemical models, and all the different fields around the world. It's not just cognitive AI that the world uses. AI is impacting every single industry. And so we have the ability, through the ecosystem investments that we make, to deeply partner on a technical basis with some of the best companies, most brilliant companies in the world. We're expanding the reach of our ecosystem, and we're getting a share and investment in what will be a very successful company, oftentimes once in a generation company. And so that's our investment thesis.
The next question comes from Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. In the past, you've talked about roughly 40% of your shipments tied to AI inference. I'm wondering, as you look forward into next year, where do you expect that percentage could go in say, a year's time? And can we maybe address the Rubin CPX product you expect to introduce next year and contextualize that? How big of the overall TAM you expect that can take, and maybe talk about some of the target customer applications for that specific product? Thank you.
CPX is designed for long context type of workload generation. And so long context, basically, before you start generating answers, you have to read a lot, basically, long context. And it could be a bunch of PDFs, it could be watching a bunch of videos, studying 3D images, so on and so forth. You have to absorb the context. And so CPX is designed for long context type of workloads. And its perf per dollar is excellent. Its perf per watt is excellent. And which made me forget the first part of the question.
Inferencing.
Oh, inference. Yeah, there are three scaling laws that are scaling at the same time. The first scaling law, called pre-training, continues to be very effective. And the second is post-training. Post-training basically has found incredible algorithms for improving an AI's ability to break a problem down and solve a problem step by step. And post-training is scaling exponentially. Basically, the more compute you apply to a model, the smarter it is, the more intelligent it is. And then the third is inference. Inference, because of chain of thought, because of reasoning capabilities, AIs are essentially reading, thinking before it answers. And the amount of computation necessary as a result of those three things has gone completely exponential. I think that it's hard to know exactly what the percentage will be at any given point in time and who, but of course our hope is that inference is a very large part of the market, because if inference is large, then what it suggests is that people are using it in more applications and they're using it more frequently. And that's, we should all hope for inference to be very large. And this is where Grace Blackwell is just an order of magnitude better, more advanced than anything in the world. The second best platform is H200. And it's very clear now that GB200, GB300, because of NVLink 72, the scale-up network that we have, achieve, and you saw, and Colette talked about in the semi-analysis benchmark, it's the largest single inference benchmark ever done. And GB200, NVLink 72 is 10 to 15 times higher performance. And so that's a big step up. It's going to take a long time before somebody is able to take that on. And our leadership there is surely multi-year. Yeah. And so I'm hoping that inference becomes a very big deal. Our leadership in inference is extraordinary.
The next question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, many of your customers are pursuing behind-the-meter power, but what's the single biggest bottleneck that worries you that could constrain your growth? Is it power, or maybe it's financing, or maybe it's something else like memory or even foundry? Thanks a lot.
Well, these are all issues, and they're all constraints. And the reason for that, when you're growing at the rate that we are and the scale that we are, how could anything be easy? What NVIDIA is doing obviously has never been done before. And we've created a whole new industry. On the one hand, we are transitioning computing from general purpose and classical or traditional computing to accelerated computing and AI. That's on the one hand. On the other hand, we've created a whole new industry called AI factories. The idea that in order for software to run, you need these factories to generate it, generate every single token instead of retrieving information that was pre-created. And so I think this whole transition requires extraordinary scale. And all the way from the supply chain, of course, the supply chain, we have much better visibility and control over it because, obviously we're incredibly good at managing our supply chain. We have great partners that we've worked with for 33 years. And so the supply chain part of it, we're quite confident. Now, looking down our supply chain, we've now established partnerships with so many players in land and power and shell, and of course financing. These things, none of these things are easy, but they're all tractable and they're all solvable things. And the most important thing that we have to do is do a good job planning. We plan up the supply chain, down the supply chain. We have established a whole lot of partners. And so we have a lot of routes to market, and very importantly, our architecture has to deliver the best value to the customers that we have. And so at this point, I'm very confident that NVIDIA's architecture is the best performance per TCO. It is the best performance per watt, and therefore for any amount of energy that is delivered, our architecture will drive the most revenues. And I think the increasing rate of our success, I think that we're more successful this year at this point than we were last year at this point. The number of customers coming to us and the number of platforms coming to us after they've explored others is increasing, not decreasing. And so I think I think all of that is just, all the things that I've been telling you over the years are really coming true and or becoming evident.
The next question comes from Stacy Raskin with Bernstein Research. Your line is open.
Questions. Colette, I had some questions on margins. You said for next year you're working to hold them in the mid-70s. So I guess, first of all, what are the biggest cost increases? Is it just memory or is it something else? What are you doing to work toward that? How much is cost optimizations versus pre-buys versus pricing? And then also, how should we think about OpEx growth next year, given the revenues seem likely to grow materially from where we're running right now?
Thanks, Stacey. Let me see if I can start with remembering where we were with the current fiscal year that we're in. Remember, earlier this year, we indicated that through cost improvements and mix that we would exit the year in our gross margins in the mid-70s. We've achieved that and getting ready to also execute that in Q4. So now it's time for us to communicate where are we working right now in terms of next year. Next year, there are input prices that are well known in the industries that we need to work through. And our systems are by no means very easy to work with. There are a tremendous amount of components, many different parts of it as we think about that. So we're taking all of that into account, but we do believe if we look at working again on cost improvements, cycle time, and mix, that we will work to try and hold at our gross margins in the mid-70s. So that's our overall plan for gross margin. Your second question is around OpEx. And right now, our goal in terms of OpEx is to really make sure that we are innovating with our engineering teams, with all of our business teams, to create more and more systems for this market. As you know, right now we have a new architecture coming out, and that means they are quite busy in order to meet that goal. And so we're going to continue to see our investments on innovating more and more, both our software, both our systems, and our hardware to do so. I'll turn it to Jensen if he wants to add in a couple more comments.
Yeah, I think that's spot on. I think the only thing that I would add is remember that we plan, we forecast, we plan, and we negotiate with our supply chain well in advance. Our supply chain have known for quite a long time our requirements, and they've known for quite a long time our demand, and we've been working with them and negotiating with them for quite a long time. And so I think the recent surge, obviously quite significant, but remember our supply chain has been working with us for a very long time. And so in many cases we've secured a lot of supply for ourselves, because obviously they're working with the largest company in the world in doing so, and we've also been working closely with them on the financial aspects of it and securing forecasts and plans and so on and so forth. So I think all of that has worked out well for us.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. Jensen, the question's for you. As you think about the Anthropic deal that was announced and just the overall breadth of your customers, I'm curious if your thoughts around the role that AI ASICs or dedicated XPUs play in these architecture build-outs has changed at all. Have you seen, I think you've been fairly adamant in the past that some of these programs never really see deployments, but I'm curious if we're at a point where maybe that's even changed more in favor of just GPU architecture. Thank you.
Yeah, thank you very much, and I really appreciate the question. So first of all, you're not competing against teams. You're against a company. You're competing against teams, and there just aren't that many teams in the world who are extraordinary at building these incredibly complicated things. Back in the Hopper day and the Ampere days, we would build one GPU. That's the definition of an accelerated AI system. But today, we've got to build entire racks, 3 different types of switches. a scale up, a scale out, and a scale across switch. And it takes a lot more than one chip to build a compute node anymore. Everything about that computing system, because AI needs to have memory, AI didn't used to have memory at all. Now it has to remember things. The amount of memory and context it has is gigantic. The memory architecture implication is incredible. The diversity of models, from mixture of experts to dense models to diffusion models to autoregressive, not to mention, biological models that obeys the laws of physics. The list of different types of models has exploded in the last several years. And so the challenge is the complexity of the problem is much higher. The diversity of AI models is incredibly large. And so this is where, if I will say, the 5 things that makes us special, if you will. The first thing I would say that makes us special is that we accelerate every phase of that transition. That's the first phase. That CUDA allows us to have CUDA-X for transitioning from general purpose accelerated computing. We're incredibly good at generative AI. We're incredibly good at agentic AI. So every single phase of that, every single layer of that transition, we are excellent at. You can invest in one architecture, use it across the board. You can use one architecture and not worry about the changes in the workload across those 3 phases. That's number 1. Number 2, we're excellent at every phase of AI. Everybody's always known that we're incredibly good at pre-training. We're obviously very good at post-training, and we're incredibly good, as it turns out, at inference, because inference is really, really hard. How could thinking be easy? People think that inference is one shot and therefore it's easy. Anybody could approach the market that way, but it turns out to be the hardest of all, because thinking, as it turns out, is quite hard. We're great at every phase of AI, the second thing. The third thing is we're now the only architecture in the world that runs every AI model, every frontier AI model. We run open source AI models incredibly well. We run science models, biology models, robotics models. We run every single model. We're the only architecture in the world that can claim that. It doesn't matter whether you're autoregressive or diffusion based. We run everything. And we run it for every major platform, as I just mentioned. So we run every model. And then the fourth thing I would say is that we're in every cloud. The reason why developers love us is because we're literally everywhere. We're in every cloud. We're in every, we could even make you a little tiny cloud called DGX Spark. And so we're in every computer. We're everywhere, from cloud to on-prem to robotic systems, edge devices, PCs, you name it. One architecture, things just work. It's incredible. And then the last thing, and this is probably the most important thing, the fifth thing, is if you are a cloud service provider, if you're a new company like Humane, if you're a new company like CoreWeave or Nscale or Nebius, or OCI for that matter, the reason why NVIDIA is the best platform for you is because our offtake is so diverse. We can help you with offtake. It's not about just putting a random ASIC into a data center. Where's the offtake coming from? Where's the diversity coming from? Where's the resilience coming from? The versatility of the architecture coming from, the diversity of capability coming from. NVIDIA has such incredibly good offtake because our ecosystem is so large. So these 5 things, every phase of acceleration and transition, every phase of AI, every model, every cloud to on-prem, and of course, finally, it all leads to offtake.
Thank you. I will now turn the call to Toshiya Hari for closing remarks.
In closing, please note we will be at the UBS Global Technology and AI Conference on December 2nd, and our earnings call to discuss the results of our 4th quarter of fiscal 2026 is scheduled for February 25th. Thank you for joining us today. Operator, please go ahead and close the call.
Thank you. This concludes today's conference call. You may now disconnect.
All right, y'all, that concludes the NVIDIA earnings call. A lot of gobbledygook there. NVIDIA so far is up about 4% in the aftermarket session, and we have not tagged into the upper daily implied move, but we got darn near close. So we'll look to see where that basically closes in at. A couple of things from the overnight session. We have Apple, that's not really that big. Microsoft was up in the aftermarket there. We had Google up slightly there. Amazon also did fairly well. And then Avago, AVGO, and same with Meta there too as well. Let's take a look at Tesla's up a little bit as well. If we take a look at NQ, nice little pop for NQ. And then I'm going to leave off with giving you all the expected moves for tomorrow's trading session. So we're up nicely here. Good recovery overall. Thanks, Eric. I appreciate it. What are we talking about here? You need to really. I haven't been watching the chat, so I have to do better at that, or get a mod or something like that. Yeah, but you're right. So if there's if there's bad talk in chats, I'll block the people. I'll kick them out. But I didn't watch. I want to give you guys the daily expected moves for tomorrow's trading session if you want to take a look, because I don't know if I'll be able to get out the brief tonight. But here it is. If you want it, screenshot it. These are the levels you want to mark on your charts. You got your upper levels over here. You got your 2 standard deviation levels right over here. Alrighty tighty. Yeah, there's some names that are really jumping. Somebody had mentioned CoreWeave earlier. That thing cranked like 10+% or something like that. Let's see where it's at now. Yeah, it went about 10% off the highs a little bit. Just big moves overall, but I'm going to go ahead and cut off the stream now. So thanks everybody for tuning in. Make sure to keep an eye out for the briefs if you haven't subscribed to the channel. Thanks, Wilson, there for subscribing to the channel. I'll see you back here on the next live stream and or market brief. I'll see y'all later. Goodbye.